specialty.
Concerned about inflation being deeply entrenched. Or focusing out on this longer end here.
They certainly are as well, Ben, and I think we're seeing that kind of reflected here by we're seeing the strength in the dollar as well, too. If you kind of correlate where we've seen the yields recently kind of bottom here back in July there, which is also when the dollar recently bottomed as well, too. That all corresponds almost exactly to where the NASDAQ kind of topped out as well, too. So we're seeing rising yields, rising dollar. We're seeing the NASDAQ start to pull back. Now, in general, though, when you start to see these bear steepeners, which really occurs, is probably one of the rarest occasions, only occurs about 10% of the time in the markets as well, too. That's not normally a negative thing for stocks because, like I said, it kind of shows you here that the outlook here for the economy is actually pretty good, and that's normally, would be beneficial for stocks here. But there's another caveat here we got to bring in as well, too, that could also be in play. Like I said here, normally we're seeing the effects of better economic data there while the longer end is kind of coming up. We also recently had the Fed announce that they're going to increase their amount of debt issuances for the second half of the year. So if the long of the curve is also being affected by more supply coming into the market there, buyers there may demand a higher yield to purchase the debt because don't forget, the Fed is no longer in quantitative easing. They're no longer buying the debt market as well, too. So they have major buyers out of the market. We may also be seeing yields being reflected by that situation as well, too, with the Fed not being a factor there as well. And if that's the case here, then that may be adding maybe a little bit of more headwinds to stock there. If the market's thinking that, economic conditions may be better, but it's not the whole picture. It's really just more debt issuances here, forcing up the longer end of the curve.
I forgot about that. That was definitely one of the straws. One could argue a twig or a branch maybe kind of being laid on that camel's back ultimately. Quite the burden to bear as far as that issuance, the magnitude of. Michael Zaremski, appreciate you joining us with a look at what's got yields to the upside, the ripple effect we're seeing from it ultimately, and how the focus has shifted to that longer end of the curve. Thanks again, Michael. I want to chart it now with Rick DeCat. He's joining us this morning, the chart master. And as Michael mentioned, in terms of this bearish steepener that we've been seeing, Rick, the NASDAQ has pulled back some. Let's begin with the move up more recently that we've seen on the more intermediate time frame. You've got your eye on 10-year yields this morning. We were talking about back up to 4.3 and how it's definitely raising some eyebrows.
Yeah, Ben, I pulled up a chart this time of a 60-day, 1-hour look at the 10-year yield. And the 10-year yield futures, rather. And it's up about 22% since those 60-day lows.
Wow.
And it's still making higher highs. It's still making higher lows. And what's interesting to me is if you look at these trend lines that I drew, you can see the slope of the gains is steepening. From purple, we have kind of a moderate slope, blue, a steeper one, white, an even steeper one. So the trend seems to be, accelerating here, Ben. There's not really a lot of signs of things slowing down at this point.
Yeah, this is a pretty good visual look at really the move up that we've been seeing and talking about based on the fundamentals here. Again, stronger than expected data, the minutes yesterday adding to that recent acceleration to the upside. Where does this put us, the move to 4.3 in terms of the bigger picture, right? Show us where we are now in the daily time frame.
Yeah, we looked at a 2-year chart for this one, just so you can kind of see the strength of the gains that have happened over the past couple of years. But, during the past, 52 weeks or so, really it's been kind of more sideways since then. We can see that we haven't broken above those old intraday highs. We did break above our old closing highs near 4.243, but the 4.326 level has yet to be breached. So that's definitely an area to watch to the upside. One other thing to note on this one is the RSI. We are actually seeing a little bit of bearish divergence as we approach these highs in price. So the rate of acceleration is starting to slow down. Look for a strong close and a break above that downward sloping trend line on the RSI to kind of validate this. So that's probably what I would be on the lookout for if I were following momentum.
That chart kind of reminds me of the gold chart, the recent run-up we saw to 2100, and it has pulled back. So it's not necessarily just the retest of that upper extreme, an indication that we are going to break out. Oftentimes we do see tests that fail, so lots to keep an eye on there, especially with the RSI. Good eye on that, Rick. That's definitely something in the bearish camp there as well. Talk to us now real quick about the ripple effect that this has, and oftentimes we look directly to some of these tech shares, right? The NASDAQ being a pretty good reflection of that, the tech-heavy index. It's seen some momentum slowing to the upside as well as yields have worked their way back up to 4.3.
Yeah, if you check out a 2-year chart of the NASDAQ, you can see that we're making lower highs. We haven't reached those 2-year highs, and we're down about 7% from our 52-week highs near 1662 as well. A couple important things. One is that we broke through the 63-day exponential moving average yesterday. We're recovering a bit above it this morning, but we did close below it yesterday. That's not a great sign for trend. Two, we broke through a trend line that's starting with the lows in January. So two things to watch there, kind of a support confluence that's been breached, Ben.
Rick, definitely something to keep an eye on here as we look at the move up in yields and the ripple effect it creates. The NASDAQ's probably at the top of the list in terms of markets to watch for that. Appreciate you joining us here. That's the Chart Master. That's Rick Ducat with a look at, again, the recent run up to 4.3 and 10-year yields, and keep an eye on the impact that has on markets throughout the day. Thanks for joining us for Futures here on the TD Ameritrade Network. Lots to come here. Up next, Oliver Rennick, Morning Trade Live's headed your way. Thanks for joining us again. Have a great Thursday.
Guten Morgen. It is August 17th. We're going to be streaming stocks, options, and futures trading today, right here on this channel. Sub up, like up, comment down. Happy money sticks around. Thank you guys for your support. You had a good rest of your evening. Had a good morning. We'll be watching SPY, GNS, GME, barbecue, whatever comes around. HE, big sell-off there, even more. You can follow us on Twitter at HappyMoneyYT and on our Discord. Link for those in the description. Our Twitter. Here's a link for our Discord. Morning, Bubblicious. I don't know what you mean if I seen bottom. Don't know what that means. A little bounce here on SPY pre-market. See if this is a false breakout to the downside or if we should be shorting the bounces. So far it looks like it's going to be opening up right near what used to be support. Turns resistance. We got some nice levels there to short. Hawaiian Electric is down 30% pre-market after restructuring talks. Company was in talks with a financial restructuring firm, facing multiple lawsuits alleging that it failed to minimize risks of forest fires. Was in talks with financial restructuring, exploring whether it needed to hire additional legal and financial advisors. I think this might end up being a great dip buy, but we'll see. Definitely ugly at this point. I mean, it's at $9.91, which is like, yeah, 2008 pricing. GNS did sell off also after their shareholder meeting or investor meeting. I don't know what you call it. I watched that this morning. It was interesting. So their spin-off is going to be with shares of a company, but they're going to be on the blockchain, those shares. I don't think they're going to be publicly traded like on stock exchange. And it sounds like there's a 6-month lockup period as well. So I'm not sure if those shares are enticing anybody, but I think part of the point was to have a share recount, which they're going to get, a share count, and have a dividend, forcing shorts to close. So could still see a big move, I think, on GNS. Here's the record date. It's 31st of this month. It still could have a big move. After that, I don't know what it'll do. Might sell off. Might keep going. Who knows? I didn't dip buy it this morning pre-market. I'm gonna just wait on it a little bit, but it did bounce pretty close to yesterday's low, which was that 50% retrace. See if we start to show some more liquidity built up here and some support. Then I will probably ride it again. See if we can't fill some gaps up there at $2. 2.8. Morning, Guts. I don't think there's any news on barbecue. None that I've heard. Buy back to VWAP there, pre-market. AMC's down 2 pre-market. Fish is up half. A lot of these stocks just got wrecked the past couple days. Breaking through supports. RAD, Dish, that was me. RAD. Could you? HE is down 33%. Yeah, run. If run gets a bounce on that 14.5 area. Base also broke the lows. Not looking good for space. It's all-time lows. Top is down 10, 11 pre-market. Jeez. Like, you don't get any follow through on these. Like, after you have some pullback, that's it. That is the pullback. That's over. I don't know. Maybe we will, but you know, just rally, consolidate, rally, consolidate. Like, this isn't a sustained rally. It's just I can see that somewhat with Tupperware. I don't know what's going on with it necessarily, but like, RAD? Come on. Your thing gets got about 20 minutes to open. My eye is doing better, which is so nice. Silver almost immediately started fixing it. Just silver drops. I have an eye problem. Use silver drops. Yeah, I saw that article, Busy Bee. Bye Bye Baby Storage to reopen from a deal with buyers. Oh, is it from a deal with buyers? Did I see that? I thought it was from new buyers, which still means nothing for shareholders at this point. I was thinking it was Dream on Me. Christmas tree shops, bankruptcy converted to Chapter 7. Isn't that one of barbecues? Companies or stores? I don't know where I saw that. into. Yeah. Should buy score deals on bankrupt brands, not good. Yeah, the way you wrote it seemed interesting. Yeah, it didn't seem good. Let's see. SPY staying above VWAP. GNS is staying below it.
It looks like it shows all the signs of one
Little
company
pre-market from
eating
these
another
guys.
company's lunch, Oliver.
Walmart have earnings.
Also in their competition with Costco, maybe quite literally,
Yeah.
as they're competing with their Sam's Club, $1.50 hot dog. Here's the thing, real fast, Kev, connecting it to the point that you mentioned and also the target is that it seems like we can, for the short term, kind of close the, I don't want to say close the book, but we can say pretty confidently that the consumer is in pretty decent shape, right? I mean, a lot of these retail stories from earnings that are not going the right way stock-wise can probably be chalked up to execution from those companies or the sector that they're in, because when you've got retail sales beating and then Walmart, which is kind of the catch-all for the consumer, right? It can't be that bad. I know a lot of it is staples, but it still is discretionary, a good chunk of the spending there too. So it seems like we can say, at least for now, that there's no like imminent collapse.
Exactly right, Oliver. The U.S. economy, the data that we're getting consistently is showing a strong labor market, good solid wages, and a strong U.S. consumer. Now that's really good for the U.S. economy. Is it good for yields? Is it good for stocks? That's another story, especially at these elevated valuations. So sometimes, Oliver, it's just simply stocks have run too far. If you look at the four indices, they all peaked. They're all sliding down here, probably a healthy pullback for the overall stock market as we get away from some of the high-profile names and get into some of the retail names. But NVIDIA could change all that next Wednesday, Oliver. You know the whole trading community is going to be watching for NVIDIA's earnings. And then we get comments out of Jackson Hole. So things could get a little dicey. But right now, we're in a bit of a vacuum in terms of earnings and data. John Deere or Deere and Company will be a good one tomorrow. Remember, Deere is highly correlated to grain prices, which have come down. That'll be an interesting one to look at. But yeah, so far, the economy's doing well. That doesn't always correlate to the stock market, though, Oliver.
Let's see if stocks can take the good numbers from Walmart, turn it into some strength in that vacuum of information between now and the weekend. It's not off to a great start, though. Walmart basically close to where we closed yesterday. So if they can't keep this stock up after those numbers, then it might be a tough gambit, really, to come up with the case for keeping this market elevated. Thanks, Kev. Appreciate it. Good context. A nice job putting it together. Let's continue that conversation with Liz Ann Saunders next. We got 15 minutes till the opening bell. We'll be right back with the Chief Investment Strategist at Schwab's Center for Financial Research. Don't miss it. Always a good one.
All right, what do we got for pre-market? W key is up. W key doing? You're good. You're good, Busy Bee. Try not to have bias, but yeah, we'll see. We'll see what the market's doing. Still type with one finger? No, you don't. What do you mean type with one finger? About buybacks? We'll start a buyback program. Still stuck in Mullen? I can't believe they're doing a buyback. That doesn't make any sense. If you're on our Discord, go talk to JH about Mullen. He loves Mullen. He's always buying the dip and the rip. He's always buying Mullen. So I don't know if that gives you any confidence. I don't know if they're just trying to... What? Why are they doing a share buyback? Crazy. Yeah, their float's already pretty small. It's 56 million. Usually companies that are doing very well can do share buybacks. Mullen is like facing bankruptcy, I think, and delisting. So I don't know if it's some tactic This make a good use of capital for them, though.
Did lift the probabilities for the November FOMC meeting. So pause in September, but the possibility of the Fed stepping back in November, at least that's what the CME tool is showing right now.
What do you make of what we've heard so far from the limited Fed language we've gotten from speakers? It's been kind of quiet in terms of their schedule. The minutes, though, and then obviously next week, Jackson Hole. Kind of walk me through the framework you're looking for in terms of what language might change or what they've hinted at already in response to this better than expected data.
The minutes confirmed what the probability showed, that even with a little bit loftier inflation data relative to maybe not expectations, it was sort of in line in terms of CPI, but PPI was a little bit hotter.
Yeah,
That
but
didn't really
the share
move the needle in
buyback
terms
shouldn't
of
have anything to do
expectation
with
for the September meeting. Then the Fed minutes came
the
out
share price, though.
and also essentially
I mean, it's
reinforced the
usually
idea
bullish news
that
for
they would
investors, but
kind of take a break in September. It's this more recent data that elevated
change it. It's not a reverse split.
for maybe at
They're going
least
to change your
one
share price
more.
like that.
I think what will be, for me, what will be most interesting to hear per Jackson Hole is not so much, is it going to be September, is it going to be November, but the way the Fed is thinking about next year, given the fact that the futures market shows about 5 rate cuts expected next year. And were we to continue to see the kind of momentum in the economy and the lack of more than just mild cracks in the labor market, even if we continue with disinflation, yes, that means that real rates will go up, but I'm not sure that that is enough to give the green light to the Fed to start cutting aggressively. So that's where I think there's still a disconnect, is not so much the next 2 Fed meetings, but the outlook for 2024 and what will be the driver of the Fed to not just be in pause mode, but to actually pivot to rate cuts.
And do you see Powell embracing that expectation at all, or can he accomplish some hawkish positioning just by trying to eradicate those cuts from the market? And I guess kind of a corollary point is, will the cuts ever come out of the market's expectation, Lizanne, or is that just like a game that's always being played, trying to guess that next stage of the cycle?
Well, if we remember a year ago at Jackson Hole, when Powell had to come out fairly aggressively in a very condensed speech in terms of time frame, and push back on what at that point was the market expectation of an actual pivot to rate cuts, potentially by the end of what was now last year. And Powell basically had to say, you guys are, you don't have this right. So the question is, pause, I think, is somewhat expected here, and I think Powell and the Fed is comfortable with that. It's whether he feels he needs to be aggressive with his language per the expectation of aggressive rate cuts next year. He may again have to do some pushback, particularly given some of this hotter data lately on the economy, not so much on inflation.
Think he'll have the gumption to be as firm as he was a year ago?
Yeah, the market is in a little bit of a pullback phase right now. We have to remember last year, not that the Fed takes its guidance from what equities are doing, but you had a pretty significant rally off the June lows last year predicated on this pivot, and that helped to loosen financial conditions. And I think it was the sort of collective ingredients of what was happening that caused him to be really forceful. He may not need to be as forceful. And again, I think it's more about what he says with regard to next year and the reaction function for the Fed. I think it's less important what he says about the very near term, meaning the next meeting or two.
Got it. Okay. So in the meantime, as investors, real fast, Lizanne, just to kind of put it together here, basically stick by the same strategy, which is make sure we're not getting too levered to high growth, expensive tech, and at the same time not getting too bogged down in stuff that depends on some big economic ramp up? Or how do you view the positioning?
Yeah, we're in consolidation mode right now, and I think probably more needs to be done, especially up the valuation spectrum into some of the high flyers, especially given the breakout on the upside in yields. I think that is probably one of the most important culprits behind this consolidation phase, and I'm not sure we're through that yet.
Okay. All right. Number of companies trading above the moving averages slipping a little bit, but not too bad compared to where we started the year. So, to your point, maybe a little bit more to come. Lizanne, thanks a lot. Great convo.
My pleasure. Good to see you.
Fantastic stuff. Thinking about the Fed and expectations for Jerome Powell next week. Lizanne Saunders, Chief Investment Strategist at Schwab's Center for Financial Research. Let's get back into the earnings when we return for the opening bell. We'll take a deep dive into Cisco, also Tapestry after it's a big deal for Capri. We've got the financial numbers there now for an update. Coming back in 2 minutes for the bell.
All right, market is open. Here we go. SPY's up 0.4%. GME is up a quarter. Never know where barbecue's gonna be because not really 100 hours trading. Hasn't started trading yet. Liquor's up a little bit. Curious on what GNS does today. You're getting a bounce there. That's from that sell-off. Hey, Roderick. I don't know, show. Thoughts on SPY? Well, we broke out of that trading range yesterday. So see today if that acts as resistance, or we pop back above it and acts as support. And this was a false break. That's basically all I'm looking for. If you look at this kind of trend, these supports, we're below it now, and we're opening up pretty close to where it would be. Might have a little bit of a pump and back near the resistance, or even right above it, and form some bearish formation. And then yeah, I think we're gonna be coming down. Otherwise, we pump back up into this channel that we've been in. So yeah, this pre-market pump, by end of day we might be below the pre-market lows or post-market. Here's up 20. Yeah, you've got some going up to do, Liquor. Yeah, I got a barbecue. I've been out and in a couple times, but yeah. Last time I got out was right here. Hopped in for the break, or no, it was here. Yeah, it was here. And I got back out here. Yeah, so I'm just waiting to see if it breaks one of these resistances. I think it might catch support at 1750 though, somewhere in this range. But I mean, I don't know. That's just looking at TA. Like if the only value of this is a shell company, that's basically no value. So then it's just, I don't know, whatever people are willing to pay for it. Swing your SPY puts. Yeah, puts did well yesterday on SPY for sure. Morning, yin yang. A bull trap? Oh, you mean this morning? Could be. We'll have to wait and see. It'll take some time. That's what you mean. Little gap up. I think we could climb a little higher before we test our resistance. I'm looking at like 4.4. I mean, we could come all the way up to like 4.43, even 4.43.5 potentially, and it's still being a downtrend. So yeah, maybe for the first trade, getting the rally back up to that resistance, and a second trade on the way down. It works out that way. We got WeWork up a little bit, 6% there. Barbecue's down 6.5, 1860. GME's pretty flat. We do pay attention to economic data. What did it come in? What was it? I didn't think we had anything today. Oh, jobless claims. That's true. That was at 8:30. Yeah, little pump on that. Philly Fed Manufacturing. Yeah, I forgot. Jobless claims is coming in this morning. Morning, Guts. Buyback is on. GNS down 16. Still holding above that 50% level from yesterday. Down a bit there. Ups down 6.8. RAD's up 2.3. Mine's coming down a little bit. Charge point up 0.5%. See, makes up a quarter. AMC is pretty much flat. Same with GME. Barbecue down 6.5. 1850. HE is halted to the upside. He's crazy. So post-market low, we've got 439.49 on Les Buy. Pre-market's 440.27. Turca's up 20%. Liquor's now getting a little steam, 37%. Buy back to VWAP. I'm so stoked my eye's doing better. Oh, that was difficult. Wait. Yeah, at 1862. Yeah, I think we're gonna see a retest on that 18 bucks. Gamer stock. Dish is up 0.9. Mix is up 1. Let's see, is HE is resumed. Yeah, big bounce on HE there. It's down like 40%, I think, pre-market. Buy still coming down. If a million shares lasts all day. Yeah, there you go. Mullen's up 2%. What was that sell-off after hours? What was that news? From them debuting this ultra high performance 5 RS? Oh, do they have earnings? No. A couple days ago. It's just back to where it started. Mullen guy? Barbecue down 5.6. Durka up 21. Liquor up 21. RAD's up 1.7. Broke my heart, RAD. You broke my heart. See if run gets support right there. Space. And the chart is ugly on space. Up down 8.7. A bit of a bounce before open. Dock down to 1. Another one that needs to find support there or it's not going to be good. Confluent down 2. High still coming down. Liquor kind of bull flagging on that 25%. About delisting. Oh, that's what dropped Mullen last night. Give it 10 days. I'm seeing something on here. SPGC. I put this in Discord last night to keep an eye on it. This is that one they were actually talking about on Trader TV. This is the golf company that just IPO'd. Went up like, I don't know, hundreds of %. Sold off like crazy yesterday. Wonder if we're gonna get a little rebound on it today. Excuse me. SPY. Min down more, getting close to low, pre-market low. barbecue still down 6. SPGC is halted. Halted to the downside. I think starts to get up, pick up some momentum. Oh, I'd take that trade at the long. I don't know why it had that huge rally at IPO. Buy, flushing down more. HE is resumed. I think today's ex-dividend date on it. Sometimes you'll get some selling after that, so I'm waiting on HE. I broke pre-market low. Looks like we've got yesterday's low and then post-market lows. Final supports. And you're at 4.3. Yeah, this is like the most inverted the yield curve's been in, I don't even know, a long time. On so many different time frames too. Little volatility here. GNS down 15. A little bounce. There you go, SPY, bounce right back up to VWAP. Yeah, pretty good volatility on SPY this morning. Big candles. lot of volume. Look at all that volume on the last 5-minute candle. The data that came out there? Oh, 10 o'clock. We did get something. Yeah, US leading economic indicators. That came out at 10. That's what that huge pump was from. That's crazy. That doesn't usually have that much effect. Liquor's coming down. HE is settling down. SPGC still down 7%. Almost took calls there, but saw VWAP and I'm like, be patient. Earlier in the day, it can kind of cruise through VWAP, but it's just, yeah. I'll wait for the morning to shake out a little more. And liquor doing the same thing, coming back down. IEP been up to? Selling. We have activity today also. I grabbed the call. It was below VWAP when I did it, to be fair. Be fair. Hey, there you go. You're welcome. GNS kind of selling a little bit, down 18. GME is now green, back to VWAP. Barbecue looks like it's not even being traded. AMC is down 1.3. Yeah, RAD. 4.3, alright. They buy stocks at 10 cents or lower. No, they just kind of explained. They talked about their company and answered questions of the spin-off and what's going on with that. That was good. It was yeah, informative. So the spin-off company is going to have, you're going to get shares on the blockchain, and I think there's a 6-month lockup period on those shares. So I mean, I think the main purpose of it is to, of course, cleanse the stock GNS. So I don't think those shares matter a whole lot. But yeah, I don't think they'll be on the stock exchange. Yeah, right, a little pop there, 4.3. Don't like these calls. All right, I got out of them. Wait. Turtle, you could swap to a cash account. That's what I've done with my smaller accounts. I want to actively trade. Oh, there's, okay, yeah. There you go. There you go. There you go. Like that. Excuse me. America 34% now. Mullins up 1%. GNS still kind of at the lows. Look at those candles on AMC. Big barcode. It's down 10. Yeah, RAD did get a little pop there. It's up 4.3. Buy, hold, and VWAP now. Turka 41%. Yeah, Apple's selling off. Tesla's down 1.3. Not sure what's holding this buy up. Other 50%. 42% on Turka. What was the sell-off on Turka for? Court complaint over Converge deal. New SPAC compliant. Still a SPAC? Oh. Weird. I don't know why it sold off the other day. Did a nice bounce today though. Buy coming down there. Morning volatility. Bulls is up 2%. $43% on Turka. Liquor gave it all back. Back to the gap up. Turka might be trying to fill that drop it did. Back to $2. Buy's coming down some more. $18.64 on barbecue. Down 5.8. Just bought 440 puts. No stop loss, no surrender. Great lotto. Ripping up there, back above VWAP. Just choppy this morning. We wait while the market waits. Etsy, 3%. You see neg up there? Surely not. No. Egg failed us also. Look at that. Pumps are short. Singular. Better chop, faster rip. But yeah, you're right. All this liquidity being built should be a pretty good move. Out of it. I should get a strangle, actually. Erica holding that 43%. AMC is green. Well, at least Liquor's holding the gap up for now. Testing VWAP again. I think popped in January this year. Zim's at a nice level. IB is low on this one though. Wow, that might be nice for some leaps or something. Like Zim. Or Divvy stock. I've got to have shares for that, of course. Still chopping around below VWAP. Hasn't really retested the breakout level yet. So that still could be on the table. Is melting down a little bit here. Oh, still chopping. What's up, Maui? It is kind of funny how they're just a decimal point apart. They're doing that again, aren't they? 8, 48. Yeah. I know, that's weird. Do, 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 do.
Hasn't really changed, but the valuations have, right? And so it's a perfect valuation investment opportunity, we believe.
We're looking at some of the top holdings right now. We obviously expect to see companies like Regeneron, Merck, Novartis up there, a few international names as well, but mostly a U.S. fund. Actively managed. Walk us through kind of the process. I mean, there's definitely a ranking of weightings here, but they're all pretty close. That's not an equal weight, is it?
No, it's not an equal weight. At Tema, we have a really interesting way of looking at how to do weights. We believe active management works best in terms of stock picking, and actually active management requires quite a lot of risk management, especially when it comes to position sizes. This is where you tend to see things go wrong. And so we employ 3 different tiers of position size based on conviction. And in terms of the
GNS,
process,
the lows.
David Song used to run a fund for Rockefeller Capital Management for many, many years, and he's got a fantastic kind of track record of investing in the sector. And he's a specialist, right? He's an MD, PhD. He's been living and breathing healthcare before as well, in terms of actually working in the industry. So he understands that. He spends a lot of time reading the academic papers to see where the good risk rewards are and where the market perhaps has mispriced a particular event or an interesting opportunity. And then the portfolio as well, as it's not just therapeutics, right? What we're looking at is trying to create a nice outcome for investors who have previously maybe not been that excited about biotech, partly because of the bear market that's been going on, but partly because they've been burnt. And so we have a nice balance between what I would call emerging biopharma, so interesting opportunities that are maybe pre-revenue, where you have an exciting drug candidate in the pipeline, and then more established names like the ones you saw at the top, where we know that there's an interesting valuation case where maybe the market's mispriced a couple of the drugs, and that's going to move the dial over time. And then also quite different to what's out there, we have diagnostics in there. And diagnostics is, we believe, kind of the next phase of development within cancer is going to be getting better diagnostics
Run.
cancer faster, just like the
Run down
biopsies we
to.
talked about. And that's quite unique in terms of funds.
You see a bounce here on run.
Glad to see some attention come back onto this group, as it feels like it's been underappreciated for some time. Though the chart of Merck has been working again, so
RAD's up 2.8.
interesting timing and definitely one we want to watch in our
Up's down
biopharma
10.8.
discussion. Let's talk royalties for a sec. The other one. This is particularly interesting. I mean, I don't think I've really seen this approach before for any kind of fund. Is this across industry, like any type of royalty? How do you guys track that?
Yeah, so look, again, very similar to a lot of the things that we do at Tema, we're trying to launch themes that don't really exist in the US market as an ETF. So this is the first royalties-focused ETF. And the idea is that, a royalty is essentially taking a cut of a revenue line of an operating asset, right? But what you're doing is you're just getting that revenue. You're not taking any of the operating and capital risk. And royalties exist across different sectors. They primarily exist within the commodity space. So we're talking about mining, gold mining, iron ore, those kinds of things, where they use royalties as a financing vehicle to build new mines or to finance existing mines. But they also exist in exciting places like music, right, where you have royalties on artists. So when the copyright is created, they earn a revenue, and some companies are specialized in buying that. And the music labels, of course, are a prime example of that. And then you have also royalties in the drug space, just like what we discussed with a company like Royalty Pharma, right, which is focused on buying royalties from universities of drugs that they earned because they developed the drugs a long time ago. It's going to be roughly, the fund is going to be about 70% commodities focused, 40% into these, or 30% into these other areas.
GameStop breaking the lows there.
That the royalty business model is extremely exciting, right? You're not taking any of
down
that
0.73 now.
Overrunning of the underlying asset.
Barbecue
It's
not
high in
really
the capital
trading at
structure,
all.
transferred, and it generates income as well, which is why we think it's an exciting place to be.
Down 6.8.
Very
Barbecue.
interesting. So obviously a pretty big music constituency here, right, with Warner, as we think about that being a major kind of association with royalties, but cross-sector as well. So what do the back tests show in terms of like correlations to any sectors or themes? I mean, I imagine it becomes pretty diversified because different industries use a royalty model. How do you make sure that it doesn't just go across all industries and trade like a broad market fund?
Yeah, so look, royalties exist in a couple of different industries, right? Primarily tech, pharma, music, and commodities. But I think the fund is primarily 70% commodities focused. And that's because of the nature of the universe, right? That's where the royalties
HE, little bounce there.
Companies like
Pop on
Nevada that have built their reputation by buying royalties
13.5.
gold mines across the world.
Are still down 13.5.
Jurisdictions. And so what we see it as royalties is kind of an amalgam of two things, right? You're getting this unique commodities exposure, and if you run some back tests, you can see that royalty companies, they
out so far
both
today.
The underlying commodities.
Got 33%, 35% from the lows this morning.
Because of the unique business model nature of these companies. That's part of it, right? So you're getting really interesting commodity exposure, and as you've probably covered in some of our other segments, right? Commodities are an interesting diversifier in a portfolio, but also there's not been enough invested in terms of capital in new mines, especially as we're entering the energy transition, which requires a lot more demand for commodities like copper, iron ore, and things like that. And so we were quite excited about that part. And then the other part is what I would call hard to access private assets, right? If you and I wanted to go buy a music royalty today, we wouldn't be able to do it. But companies like Warner are able to own the copyrights on the artists that sit on their labels. I mean, one of the other positions is Universal, and Universal, they basically
there's Spy's move.
I believe it's
Lushy
top,
downside.
the top 20. They have the top 15 artists in the world right now, and so it's really difficult to access these things. And then we back the management teams to essentially collect a portfolio of these interesting royalties, and that's what's inside the fund.
Okay, very cool. Very creative. We'll definitely keep tabs on both of them as they just started trading, so we'll give it some time. Yuri, thanks for taking us through this.
If we get a Michael Long on that low.
Sure thing. Yuri Kojamirian, CIO at Tenna ETFs. All right. So CANC,
the
ROYA.
post-market low from yesterday.
Chart Masters, taking a look ahead. Ross Stores, Deere, and Estee Lauder. When we come back, earnings return to the forefront of our discussion.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by
GME flushed with that, down 1.26. 1834 on GameStop. Getting close to that next support. We built this Inverse cup. See if we get a handle. Here comes SPY, down some more. I got some calls. Might be out of these quick. Gonna break even stop on him. Liquor's up 16.5. Maybe making its way back to VWAP. Oh, GNS flush through there. Flush through that low. $1.08. And just rip back up. Yeah, GNS is down 20. Looks like it's bear flagging here. I got a little better entry, would have been easier for my stop. If we start the ascent back to VWAP. Friday climbing again a little bit. It's up 5.7 now.
Oh, 21-day EMA, you're about 172.
Okay. Yikes. Definite yikes, but I appreciate the optimism and the hope, the fairness, Rick, with which you're doing the chart analysis. Because boy, does it look pretty ugly. All right, last one here. Let's talk some commodities and farms. Deer, not a great look the last couple weeks, but just hit a high last month, so certainly could go either way. Little bit of support maybe at 420 bucks. We'll get to the chart in a sec. Renito, how's the vibe ahead of the report?
Well, the vibe is a little mixed, right, for this, and we get a chance to find out just how strong the commodity structure has been doing when it comes to the heavy equipment. But adjusted earnings are expected to come in at $8.12 a share. That is a substantial fall sequentially. Not substantial, but a fall sequentially. But revenue is expected to rise year over year to $14.22 billion. As you said, the stock posted a new 52-week high late last month, and it's up more than 15% over the past 12 months. And in this earnings report, analysts are also looking to hear more on its recent acquisitions. Last month, the company paid $250 million for an ag tech company that will help with robotics, and it'll also develop autonomous driving technology that is compatible with farming equipment. So they're looking to hear more about that, as well as the maker of precision spraying equipment, Smart Apply. That number, or the amount that the company paid for that company, was not disclosed. But those will be two big things that investors will be looking for as earnings come out.
Nice. All right. So a little bit of growth potential in some of the products, and even a little linkage into the AI trade, which actually makes a lot of sense given how much robotics contribute to the farming process. Rick, chart-wise, it's a pretty interesting one. I feel like less directional than the other two.
Yeah, I can see why you would say that here, because we're in a bit of a change right now, because we had this uptrend that began with those lows that we saw near May and June, and we've broken that uptrend now. Now we're in more of a downward channel type pattern here. And we closed below our yellow 21-day EMA, actually, so pretty resoundingly as well.
Barbecue.
The moving average itself has also
Down
turned
8.
from sloping upward to sloping downward in recent days. Neither of those things are really what you want to see if you're bullish in a name like this here. However, we
Yes,
also
it'll
stopped
bounce.
at an interesting
Still
point
down
today,
20%
the
though.
417 mark, that green
Broke
dash
through
line.
yesterday's
That
low.
represents where we had an earnings gap up back in November. It's also been a frequent stopping point for price, both to the upside and the downside.
Liquor climbing back up to VWAP.
Today, it's proving to be supportive here. So that's something to keep an eye on as
Cheap
well.
back down to VWAP.
RSI slipped below the midline.
RAD at 5.5 now.
Below the 21-day EMA.
Got some making up to do, RAD.
Confirmation when something like this
Still
happens.
unhappy with you.
Two technical indicators being breached at the same
Durka,
time.
36.
Not a great sign once again if you're bullish here. Support comes in at the confluence of our lower trend line and the 63-day EMA near 414. Resistance once again at the yellow 21-day EMA near about 428, Oliver.
Deer needs to hold on to some of that support.
Turtle, you have to decide that for yourself, man.
Roughly, where you got that green line. Thanks, guys. Good look ahead.
SPY made it down to yesterday's lows and after hours lows and bounced. So it's very typical for it to bounce there, whether it builds inverse handle and comes down further. No one knows. And if you're going to get emotional and be upset because you didn't sell at the very bottom, you should not be doing this. You should learn how to play poker and at least enjoy yourself at a casino where you can get free drinks and talk to real human beings. Or just follow your heart. Listen to your heart. Just like that. Might be adding to my calls here. Yeah, I just added up a strike. See what happens when we get to VWAP. AMC is green 2%. Look at you. Who was it that's bullish on healthcare? Oh, that's JH. In our Discord, he's super bullish on healthcare. There's VWAP break on SPY. There it goes. There's the push. Come on, don't dance around VWAP. Danced enough. If we can get a clean break of this downtrend, could still be in the same selling channel here. Not too high for that to not be the case, so you got to be careful. The longs, case doesn't break. Starting to a little bit. Yes. Oh. I'm up on 11 o'clock. Yeah, Myrna is up 5.5. This thing just sold off so much. It'd be a nice dip buy on it anyways. VWAP contender. This orange line, this is the 9 moving average. Alright, this one's 180. This one's a 9. The green one's a 50. We can't help you how to trade, man, because there's no way to help you how to trade. You have to decide what you're going to do with something before you buy it. When will you cut losses? When will you take profits? Simple as that. If you don't have that plan, don't open it up. Low of the day of yesterday is a very good time to take profits on shorts. That is a support. On longs, from this dip, a good time is VWAP, which we'll see, it's starting to break out. Another good time, of course, would be pre-market high or high of the day. Some of the more basic horizontal supports and resistances. I'm cutting some of these. I mean, yeah. Friday, do it. 6.5%. You'd like another 200%. It's what the body craves. Yeah, Moderna up 5.25 or 5.75, almost 6% there. Closed a couple more. I got a couple of runners, but And SPY's coming back down. Back into its chop. Well, good thing I cut what I did. Ugly. Barbecue. Flushed down even more there. Down 9.8%. 1785. Getting close to that 1750 support. GNS bouncing back up to VWAP. Still down 18%. RAD 8%. What was the retrace on there? I even deleted the bib levels because that was ridiculous. 100% retrace, is that what we got on RAD? Yeah. Not great. What's up, Fernando? Turtle. Eyes coming down more. Oh, charge point popped up there. We'll pop while we're watching it. Up 1% now. Point 3. Barbecue hit 1755. It's down 10%. That is the support level. We have drone there. That one doesn't hold. And at like 15 cents. $0.10. Of course, the OTC low, all-time low. Big candles this morning on SPY. Big choppy candles. Barbecue's made an even steeper downtrend here. GME pops back up to VWAP. RAD's up. RAD's rallying a bit. Almost 10%. Charge point up 1.5. I think you say this thing gets to $8 before tomorrow. Don't think so. Eyes coming down more. Pick up some more SPY calls down at the low. Excuse me. If it was, yeah. Okay. GME popping up their VWAP there. That's your first tell for SPY. You think the dollar matters? You think bonds matter? SPY follows GME. It front runs it. Kind of a joke. Did pick up some more calls there though. I'll have a pretty tight stop on these. It is a bit of a head and shoulders here, but we are kind of still in this chop. And this is close to the low of the day. Yeah, I don't like the head and shoulders much. But if you see, we're making higher lows eventually here too. This downtrend is slowing. I'm starting to round out this bottom. That's what I'm looking at. More than just that head and shoulders. Head and shoulders inside a channel doesn't mean a whole lot. Inside a range. It's at a high, yeah. If it's at a low, inverse, sure. Now if it breaks the neckline, then yep. Close them. Wait for a better entry. RAD 9.5%. That is neat. Puts good work here. Just your risk reward isn't great. Because you'd want to be taking profits like here. Low of this candle, if that. So, just not a whole lot. Not to say it can't go lower, but that's where I would start taking profits. And that might be where it finds support too. This chop is crazy. I think we probably get one more little flush here, but again, I don't like the risk reward. Alright, so now an alert to the Theta Farm. We rolled another play today. I roll another one. It's been months and now I'm gonna roll some of them. Me. 10% on RAD. Is very, very jumpy this morning. 11:20, we've got 10 minutes till Euro close and market's not decided anything. Been in a channel, but it's just been so choppy. Ooh, there's your flush. So it's below both the lows there. See if we can come down, come up, retest that as resistance. Or if that's just a stop hunt. A false break. Put a nice curl off of that left shoulder to find the flush physique. Now if it holds below here, got below. And then just like that, it's green. So that's your chop. spies those lows again. Head and shoulders. Looks like it's playing out. Still like very controlled though. You can tell by how it just bounced back out of there. See some more confirmation of this. Let's go Rite Aid. Nice, Bubba. Happy Thursday to you too, Kala. BGLC, huh? Or looky. BioNexus. You get an approval? That's a ton of volume. %11.5% there on Radical. Excuse me. No news? Run up and tank, huh? Well. Barbecue flushed down 13.5, below 1750. That's support. Wow. I bet we pop back above there by end of day. Back to VWAP. I doubt it closes this low. Sell off though, 15.5%. That's 1670. I'm making a new low there. Not convinced quite yet. There's a flush. Let's see it. Come on. Got some at 17 cents. GNS hanging right around that 50%. Retrace level still. RAD 1140. Almost back to $2.
be responsible for actually delivering prescription medications and offering upfront pricing. Mark Cuban's cost-plus drug company will also aim to mitigate unexpected drug
Is it running on CBS earnings or something?
Increases, as well as trying to streamline the process. We also have
CBS is
some others
down.
that are going to be a part of this coalition as well. So Blue Shield actually does anticipate around $500 million in annual drug expense savings after the strategy is fully implemented here. So Nicole, this might be the first step of a change in the healthcare landscape here. Hopefully it is going to be successful, and maybe we do see drug prices coming down here for the consumers like yourself and myself.
All right. Well, we'll have to wait and see.
Maybe it's rallying because there's bad CBS news.
Important news. And what about Applied Materials? We have earnings after the bell. What are people focused on for that?
Yeah, this is going to be a very interesting earnings announcement, to say the least here. Now, they really do focus on creating and building out the fabrication centers here. So they're going to be the first part of the supply chain for this ramp up in AI chips. And the market's actually looking for revenue to come in at $6.16 billion. That would be a decrease of about 5.6% year over year. And the adjusted earnings per share estimate is sitting at $1.73. That would be down about 10.8% on a year over year basis. But once again, we're going to be seeing how the semiconductor group in general, their segment is going to be able to grow.
Yeah, kind of a reversal candle there in the 5 minute.
Especially if you're looking at the display and adjacent markets, which is around the LCD, LED screens and things of that nature, has seen a dramatic drop because PC sales have been dropping and has not seen a bottom yet. So that's really what we're going to be focusing on here. What is their expansion strategy? And if they do see a lot of interest coming from some of its major customers like Samsung and Taiwan Semiconductor.
All right. Thank you, Kevin Green. Thank you so much, Senior Markets Representative here on the TD Ameritrade Network. All right. We have a special guest with us for our spotlight, all about retail this week. And some of the big names in the second quarter, right? Caleb Silver's with us, and he has the good, the bad, and the yummy. What? Caleb Silver, Editor-in-Chief at Investopedia. Thank you for always making this fun for us.
Hello there on SPY.
What's the big picture on earnings season? You've been covering a lot of this on Investopedia. Are you getting some themes?
Yeah, we're getting some themes, and we'd like to say goodbye to earnings season because it's been no fun and no country for earnings beats, where we have the biggest earnings decline in the second quarter for S&P companies, down 5.2%. As you know, that's the biggest drop since the third quarter of 2020. You remember what was happening back in the third quarter of 2020? Not great, right. 49 companies guiding lower here, only 30 companies guiding higher. But the companies that are beating expectations, and that's usually the case, the stock is not trading higher the next day, down about an average of about 0.5% according to FactSet. So let's say goodbye to earnings season and move on here into the third and fourth quarter and get through the year.
Yeah, and some of them were lowered expectations, and even an earnings beat doesn't get you that move higher. I just think there's a lot of tepidness in the market. I mean, how's the anxiety index?
12.8% on RAD.
Right? I mean, we had such a great June, July, and now August is a different story.
Yeah, that's right. Anxiety around markets-related themes is creeping up again. People are also very concerned about their personal finances. We know that student loan debt repayment is coming soon, and the interest on that debt is coming soon. We know credit card debt is at an all-time high here. People are spending deep to keep it going around here, but I think there's concern about that, and it's making its way into several of the stocks that we're watching.
All right, let's get to some of the names. All right, you have the good, the bad, and the yummy.
Yeah,
what's the good?
The good is TJX, crushing it. Yeah. That's, of course, the parent company.
The yummy?
TJ Maxx, Home Goods, Marshalls, and several other companies, hitting it across all cylinders. Year-over-year sales up 7.7% despite inflation. That's $12.3 billion. EPS up 23%. So at a time where people may have been pulling back on some of those discretionary items, not at their stores, raising guidance for the year here, pre-tax profits and EPS. So around the board, the company's saying executing well across its stores, and they're seeing a lot of strong foot traffic and online traffic. Good recipe.
We'll flip from puts to calls here pretty soon.
I mean, there's no doubt that people have been looking for value, but something like TJX, as you said, when we had on Jerome Martis, who's does a lot of research in retail, and she actually said that she thought TJX would be a stellar performer, which it is, as you noted. I mean, with a solid quarter, there's even talk how it could outgrow the peers and maybe take some market share.
Oh, RAD ripping there.
It's interesting. Whereas,
okay,
the
broke
bad,
up for $2.
Not as. People had so much high hopes for this company. I don't know.
Yeah, Target.
Tell us more.
Target is missing the mark. I'm going to use that pun intentionally here. It has been a rough several months for Target. The stock down 28% since those highs back in February. Why? It could not continue to do decreases in pricing because it had to decrease prices so much and offer discounts to get rid of all that
Right, it just started squeezing.
from the past couple of years.
Yep.
Facing
Do
that,
it.
but also facing
Looks
the
like it is. Look at this volume
over
that
its
came in
prime
here.
merchandising in the month
$2
of June
is a
on both
big-
sides here, so it angered a lot
big
of its
pop,
customers.
15%
There was
now.
a lot of feeling from the CEO who talked about it yesterday when the company reported that they were concerned about worker safety, so they're going to reduce that or scale that down next year, but also high inflation, and they're seeing a pullback in prices. They're even citing the fact that we're going to have
from the technical
student loan
$2
repayments
level.
coming back as something that's going to hurt their sales. They're guiding lower at Target. Not been a good year at all for that company.
I mean, they missed their numbers, and while some of the margins seem good, I think there's still a lot of concern about inventory and that they may have too much, and even their guidance, which they're being cautious now, that they still just might. I can't wait till the next earnings season. Let's see.
Absolutely.
I mean, first we need a break from this one.
Yeah, we need to get past this one, but just compare and contrast that with Walmart, which was executing well across
16%
grocery and
on
across
RAD.
gasoline, two key
Yeah.
things
Yeah.
that it has really over Target, and they're able to offer that lower price point when Target had already done those price reductions.
that volume.
There wasn't a lot
Bust
more room
out was
to go
crazy.
down, so that's the struggle there.
And so Walmart, obviously a big story here today after its quarterly report. Let's get to the Yummy.
To Yummy, you got to look at Cava, right? This
Yeah.
is that Mediterranean restaurant chain, the fast casual chain. Went public this year. First quarterly report as a public company, absolutely crushing it. Net sales up 62%. A lot of that, though, was store openings, right? The more stores you open, the more revenue you can recognize there. They opened 16 new stores, got about 279 out there. And they're going to open about 65 to 75 new stores next year. So when you get store growth at a chain that people like, you get to recognize that revenue. That's the Starbucks model working for Cava. Traffic, though, in the restaurants up 10%. But you know this, Nicole. Food away from home, restaurant food, is very expensive right now when we look at CPI. Still Cava finding the sweet spot there.
Yeah, we had the IPO here not that long ago, met with the CEO. The CFO was on our network. We'll have the CEO next week here on the network too, so I'm looking forward to that. And that Mediterranean food is something people want. And their IPO was at a high price point, and it's been holding on. It ended up being a pretty good
close the
stock
rest of those
so far,
puts.
overall. Because sometimes you have an IPO and then
It fizzles, especially in food and fast casual. Hopefully they brought a Greek salad when they came.
Oh, they filled the whole floor with great food, Caleb.
Might just wait here.
Caleb Silver of Investopedia.
With a little pullback,
Thanks, Don.
getting an engulfing
Thanks,
candle
Don.
maybe being built
Thank
on the
you so
5 minute.
much, Caleb Silver. Coming up next, disruptors. We're looking at Bank of America just upgrading Adobe.
Diversions
Part
here.
of the company's AI portfolio. George Sillis is all over this story and has an example trade for us as well. Coming up.
Yeah, we do have an RSI divergence there. That's bullish. That holds. Adds up 14.3. Yep. Like the engulfing candle. Still 2 minutes for that. Like the RSI divergence. Nice. I'm not bullish on Mullen at all. Wow, it's down 6%. What the heck? Oh, wasn't it reverse splitting? Or no, it already did that. Yeah, I'm not bullish on this stock. As awful sell-off. I mean, it's very clean looking, which is nice. Cool. Mullen launches stock buyback program. Yeah, I mean, that just seems stupid. Must be something else going on there that I don't know about. Oh, I'm out. $16.5% on RAD. Is this from CVS? One of its insurance partners is turning to Amazon. Oh, we're gonna lose a lot of business. Or how that would be bullish for RAD. 15.5% though. Nice bounce. Show us a lot more RAD. GME at 18.5, down 0.9%. Got barbecue at 17.11, down 13.5. MC making moves? Yeah, MC still up 4%. That ain't bad. Fred announced they're now selling 100% pure Colombian coca. Cocaína. For all your sniffles needs. Don't let the Mr. Sniffles man get you. Whoa. SPY's coming down there, new low. Found a little resistance on RAD, it looks like at 2060. Whew.
We think in the low double digits. And as far as DraftKings and FanDuel are concerned, longer term, we would say some of the concerns we would have for those names is that they're pure online platforms. They don't have the physical casino presence that Penn has, that MGM and Caesars have, nor the media presence that Penn has, especially now with ESPN. And we think that longer term, that could spell some trouble for DraftKings as far as maintaining the high amount of share that they have.
Yeah, before I get over to Lee Bowl, Dan, what are your ratings on these names that you mentioned? You had DraftKings, MGM, Caesars, Penn. What kind of ratings do you have on all these names?
Yeah, so Penn sells at about a 20% discount to our $29 fair value estimate. Caesars is pretty undervalued right now. We think that its intrinsic value is $81 per share, so that's just over a 30% discount to where shares are currently trading. MGM also a 20% discount to our $53 fair value. And then DraftKings is trading around our fair value right now, which is $26.50.
Right. All right. So the others seem to provide some value and probably are more likely the ones you'd buy at this time. Lee Bowl, good to see you. Tell us a little bit about some of the pros and cons that always grab your attention.
Right. Some of the pros, I think, is just the overall sports gaming universe is expanding. Its take was 4.6 billion through May, up 65% from a year ago. Also, of course, we're having more legalization coming. Kentucky launches in September, North Carolina's in January, Vermont will likely launch in January as well.
So choppy,
and I
man.
think for Penn, it was probably a
Market's
good
been in a
idea
downtrend, but it's just been
to get out of the
pretty ugly.
Barstool name anyway,
No,
because
like
as we
the
all
only
know, Dave Portnoy's had some issues, and it was
formation
thought
we saw
that
was
that
a head
was
and
one
shoulders.
reason that they
And
might
then it
have
broke
some
it, and then he
problems
had a huge
getting
rip to it, and then it's
a
like
license in New York.
crazy chop.
So I think it's good that they
Going in a
are
downtrend, it's like
changing the brand name to ESPN. On the downside, though, you know, we were talking about having that integrated presence of both the online
I've had
and
this cough for like
the
a month.
in person in the casinos. But I will point out that, you know,
COVID
Caesars
cough.
has
I
had
told you
that,
guys were
and
getting
their
it.
market share is only about 6%, you know, compared to 30% on DraftKings. So I think that that will probably work in the long term, but it's not a given. And the other thing is, rolling out a sports book with is harder than it looks. We just saw that Wynn closed theirs down because it wasn't really working and couldn't
Look at these
compete.
huge
So there's
wicks,
that
man. It's
to
just
think
like
of as well.
Yeah, you know, I'd like to
bleh.
hear your thoughts, Dan. I mean, how easy is it for Penn
Stop
to grab back
hunting
some
and
market share from,
very
from
controlled
some of the
still.
competitors? I mean, will they be able to do so, in your opinion?
I think Wynn is a great example of why you need a physical presence. I mean, Wynn just came out. They've been de-emphasizing their Wynn bet for quarters now because of the competitive landscape, and just announced last week that they're going to exit all the markets except where they have a physical presence. So they have a physical presence in Boston. They'll stay in Massachusetts and, of course, in Las Vegas. So I think that, if anything, just kind of buoys the argument that longer term, having an omni-channel exposure where you can kind of cross-sell between online and physical worlds and leverage the casino database that you have into more efficient marketing and promotions is a good thing. So we weren't surprised by the Wynn news at all.
Look, you said the launch
It does
is
look like
expected to occur
maybe
this
starting to
fall,
bottom
in your
though.
note. Where do we stand on the world of gambling during, just a quick big picture here, Dan? Where do we stand? Because during the pandemic, everybody was doing online everything, right? So are people gambling?
Yeah, especially online. I mean, you just heard that, you know, through May year over year, that it's up 65%, you know, year over year. Sports betting was in the U.S. a $7.5 billion revenue market last year. Yeah, iGaming or betting online with casinos games was another $5 billion last year. We think both of those markets by the end of this decade are going to be showing revenue above 20 billion each. So, and you know, some of that's stoked by the desire that people have to gamble, but also by states continuing to launch.
Yeah. Well, you know, Lee in his notes talked about Kentucky and North Carolina. I'm stealing your notes, Lee. Vermont. Thank you both for being with me. I'm sorry I'm running out of time, but it's wonderful to see you both on an important topic that everybody loves, sports betting. And football season is upon us. All right, let's go. I'm ready. Love Sunday football. Dan Wasilek and Lee Bolt, thank you both very much. That's here on Trading 360. I'm Nicole Pedalides. Thanks for being with me. I'll see you later.
Nicole. Look at those freaking wicks, man.
On the red, but relatively flat here. The S&P 500 benchmark down nearly 0.1%. The Dow Jones Industrial Average off about 45 points, or 0.13%. Nasdaq 100 down nearly 0.3%, and the Russell 2000, the small caps, leading the way to the downside once again, down 0.4% and down nearly 3% so far this week for those small caps. To help me break down this market action, let's bring in my co-host Kevin Hinks. Kevin, what's your take here? We've got some decent economic data this morning, but it just seems like any little spark of a rally is getting sold here by traders.
Yeah, the economic data this morning was fine, but it's not top-tier economic data. It's not market-moving economic data. And I think the market is seeing good numbers in Walmart not be rewarded. Now, if you watched yesterday's show, we gave you a reason why it might not reward. Walmart's run a long way. The valuation's pretty lofty here. So Walmart backing off, that's probably disappointing the rest of the market, Tom. And this market is struggling with the reality that a strong U.S. economy, and the data continues to come in on the strong side, may mean good things for the U.S. economy, but it doesn't necessarily mean good things for the stock market, Tom, because as rates go up,
noon o'clock.
There's overall.
Thanks, guys, for joining today.
You know, the
struggle.
What I call failed rallies.
Struggle's real today.
This market opened higher.
We got 14 likes
indices were higher pre-market
at noon.
And you look at a
Thank
10-year now over 4.3, and that's just not a good visual for this market to see, Tom. And I think what you're seeing is sellers coming in on rallies and selling rallies, Tom. I think that's what you're going through. And, Tom, we're waiting for NVIDIA next Wednesday, Jackson Hole next Thursday and Friday. That's the
Jackson Hole next
big
Thursday and
event
Friday.
on the calendar, other than, like I said, some earnings. But NVIDIA is really the one that's going to either energize or put the kibosh on this market, Tom.
The kibosh.
So we can close the markets for tomorrow, have a free Friday, Kevin, if we don't have to worry about anything. That'd be awesome. Let's bring in our next guest, though, Nathan Peterson. He's Director of Derivatives at the Schwab Center for Financial Research. Nathan, I wanted to get kind of your take here on the weakness that we're seeing, not only this week, but for the month of August. Probably a much-needed pullback at this point as valuation of the S&P 500 still relatively elevated, and growth prospects starting to wane here a little bit.
Yeah, it sure is. And, you know, we did technically get that orange flag with the negative RSI divergence in late July. And, you know, guys, when the market, you know, if you look at June and July, when the market's moving higher and it seemed like the S&P was just continuing to notch those fresh 52-week highs, you get into that FOMO mode and that performance chasing mode, and valuation doesn't matter as much because one of the bullish theses is, hey, yeah, we might be fully valued, but the S&P keeps on climbing higher. The technicals are confirming that, and that becomes, you know, one of your thesis for getting into the market, for pulling money off the sidelines and putting it to work because it continues to climb higher. Now we've gotten technicals that are broken down. We're slicing through those 50 SMAs on the NASDAQ 100, S&P 500, NASDAQ Composite. And you've got the bearish seasonality. And then, like Kevin's saying, you've got the 10-year making basically new cycle highs here, which tells you that the bond market is reassessing the situation. And now that the market isn't providing that thesis as to why you might want to put money to work, now it almost feels like, you know what, August is not a great month seasonally. September isn't great seasonally. The 10-year is breaking out to new highs. I can go get 5% on the sidelines. What's my reason for getting in right here, right now? Actually, instead of FOMO, if I wait, I may be able to get in at lower prices because the technicals are telling me that it doesn't look like we're getting ready to bounce.
Yeah, and I was saying that in the month of July, as we were rallying two highs for the year in the S&P 500 and NASDAQ 100, that was up over 44% at that point. It seemed like it was getting a little rich as far as valuation and stretched on that technical basis that you mentioned there, Nathan. But Kevin, I'm looking, and all my focus right now is on that 10-year yield. If we can get a chart of that up, the 1 year, 1 day, 4.3%. We're topping out here right below that level that we saw last October. We break through that, we're at 16-year highs on the 10-year yield. Is that causing most of the concern here for the equity markets?
RAD bull flagging up here.
You know, Tom, Nathan talked about
AMC's up
how
4.
this is historically not a very bullish time for the market. Well, today's August 17th. You put up a 20-day chart of the 10-year, and it goes from 379 to 4.3. Now, throw that on top of a historically not bullish time of the year, and you've got a much more bigger concern by the stock market, and then throw in some lofty valuations in some of these names, and things don't look as pretty. And all of a sudden, once the hesitation starts, you know, this has been a drumbeat, a grind higher in yields, not a spike, but a grind higher that I think is taking its toll on investor sentiment. Remember, the strength of the data that we're getting on the U.S. economy, we got 2 more good numbers today. It's got to eventually affect how the Fed is seeing this market. And once we get that idea that good news is no longer good news again, and the stock market and the economy aren't necessarily always the same thing, you make the case to lighten the load here on some names. But like I said, Tom, this could all change next Wednesday after the bell went when NVIDIA. Remember, NVIDIA really started a lot of this with some of their massive earnings and big beats. So next Wednesday could be a big day for this market in either direction, frankly. I don't know what the direction is, but next Wednesday is going to be a big day with NVIDIA's earnings.
Definitely. Nathan, when you look at the Fed minutes from yesterday, there we've got that 10-year yield up there, creeping up towards those October of 2022 highs. We'll see if we can get through there today.
High coming down,
Nathan,
testing the lows again.
When you look at the Fed minutes yesterday, they basically said labor market remains tight, robust jobs gains, unemployment rate near 3.6%. I mean, that's showing signs of resiliency in the economy. Then you had the Atlanta Fed GDP now that came out yesterday, 5.8%. I mean, it seems like it was going up 1% every week on that. But then on the flip side, you see tighter credit conditions for the consumer, stretched inflationary impact to that consumer moving forward. Retail sales better than expected. It seems like we're firing on both sides of this debate here, and investors getting caught in the middle here.
I know. You know, you look at, you're exactly right. You look at leading economic indicators, you know, again, down what now, 16 months in a row, you know, this morning that we got that data. And, you know, you mentioned this before, Tom, but, you know, does something need to break? and when you see that, you know, the Atlanta's, you know, GDP estimate, you see retail sales that we had earlier this week, which were robust, does that give permission to the Fed to be more aggressive? Because I think when you look at their target and you look at where we stand now and you look at the trends, you can say, yes, the trends, we are seeing that deceleration there in terms of inflation. I think the question on the back burner has always been, well, is it declining fast enough in terms of its trajectory to make the Fed comfortable enough to where they don't feel like they need to push down on the pedal a little bit more and hit us with a couple more 25 basis point hikes, whatever, even if they go every other meeting or every third meeting, it doesn't matter. But I think that just continues to lead to that question that the longer the Fed is hanging around higher for longer here, then is that going to lead to one of those situations where we need to see some data fall out of bed before we know that the Fed is off our back?
Yeah, and it doesn't seem like we're getting any of that data. Kevin, anything stick out to you? Philly Fed did rebound, climbed 25.5 points to positive 12 in August, much stronger than forecast. I mean, is there anything out there that's saying to you that the data might crack where, you know, we're kind of in this lull here in August, and that equates to that pullback that we've seen?
No, it's difficult to find something, Tom. I mean, if you think about it, wages are higher, unemployment is still strong, the job market is still doing incredibly well, and there's the fundamentals for strong economy. And like I've said before, yes, Jerome Powell has rates now at a restrictive level, right? And maybe the longer that they stay there, the more work that will be. Maybe you can make a case that this market has, the patient has enough medicine to get better. But there's lags in that data, but there's lags in the spending
up
too,
now.
Tom. And there's the biggest fear, is that
If it makes the
all this
engulfing
work they're
candle here.
doing is being offset by the government spending on the other side. And
It's
if that's the
stretching for
case, and
VWAP.
labor markets, right, with all these negotiations from unions, that's a lot of people getting raises, right? That's going to feed into the wage data, and that's going to feed into spending. A lot of people are about to be making a lot more money in these unions. We can argue why, but the reality is they're all getting raises, and wages are going to go higher. And the move from here, where we are now, to 2% inflation could be a difficult one.
Yeah, and to kind of hit on that weakness that we're seeing in the equity market overall in the month of August and this week also, Nathan, you take a look at an Apple 1-year chart. You've got RSI levels that we haven't seen all in the past 12 months. It's at a 28 level at this point. It kind of tells you the tape there. It's down 11% so far in August. It's in 3 of the 4 major indices. Is this a barometer for what's going on in the overall market?
Well, I think it speaks to kind of some of that sentiment, and that basically we got to a valuation point where you got to show me, if you're going to, Apple's going to have a 30 PE going forward, being the largest, company in the world. Where was the revenue growth there? And that was kind of the theme for this past earnings season, is that, yeah, we beat on EPS, but where was the revenue growth? I mean, we had the lowest revenue beat rate, since 2016, Q4 of 2016. And then when I look at the charts here, to your point, yeah, they kind of pull back what it looks like to that 10% roughly correction level. Microsoft did this, Apple did this, NVIDIA recently did this, and it looks like they were trying to find some support, some bid support around that technical 10% correction. But to your point, today they're kind of breaching lower. We're basically at the lowest level since May here in Apple, and I think it's just kind of speaking to the appetite that has changed to own stocks with this type of valuation, given the rates that are moving higher, breaking out to a new cycle high, which leads to uncertainty. How high do they go? I talked to Colin Martin, one of our directors of fixed income. He said basically the driver for this is because higher for longer. That's the main driver. What's also going on is the Treasury issuance and maybe a little bit of the unwind of the yen carry trade. But when you're breaking out into space here, that just leads to uncertainty. The bond market's saying we got it wrong. And then when you have that type of uncertainty, where's the compensation for that in the multiple? It's not there in equities. So the appetite is shifted from FOMO to, well, maybe I need to raise some cash because it's not the best place to be right now.
Right. Yeah, definitely a trend lower, and Apple reflective of that. If you liked it at 198 when it was hitting all-time highs ahead of earnings, you got to love it right now because it's oversold on a technical basis for sure. Maybe it can rescue the markets. Hey, guys, let's take a quick break. When we come back, we're going to take
It's
a look
definitely starting to
at
flatten
another
out.
earnings play here.
Waiting
and that's
for
in John Deere
hopefully
Company,
a low
Company.
retest or even a new low to go
has
long.
fallen about 6% from
Kind of like we
last
did
month's
here.
all-time highs and reports earnings.
But I'm
ahead of the
hoping
open
it
tomorrow.
breaks
Coming
out
right
this
back.
time, doesn't stick us in this channel. Just stuck in here. AMC still up 4.5. GME down 1.3 at 1834. Barbecue did bounce there. It's back to VWAP. It's 1650. That's crazy. Kind of assuming this 1750 could hold. Got a big inverse cup here. Built on barbecue. Poured out all your barbecue sauce all over your keyboard.
Perspective, Tom, they're still elevated, right? They're just they're down off those Ukraine war highs and the spike highs, and you're getting a lot of rain in the Midwest, Tom. You know what the old saying, if it rains on LaSalle Street, grains will be down. So we're getting a lot of rains in the Midwest, but here's the way you got to look at Deere & Company. And you got to treat it the way you treat energy stocks with crude oil. Right, you got to look at the grain markets, and then you got to trade Deere based
up here a little
on the
bit.
grain markets. The grain markets are still historically high. You know, they're way off. They're off their big highs though, Tom. And these profits,
You're getting engulfed in candle here on the 5 minute.
Profits again this year, which gives them cash to buy products. Now, you see Deere stock; it's down off its highs, like the grain prices are down off their highs, but still. It should be a good summer for farmers, and that should correspond into a good summer for Deere & Company, Tom. They use that cash to upgrade their equipment when they have it like this. And you're right, grain prices are off their highs, but still historically elevated.
Definitely.
Like RAD's going back down to BWAP.
Backlogs also for this company, at least through the end of the year, as far as demand. But you know what, Nathan? This is one of those companies that actually benefits from inflation. The higher costs, labor costs, equate to farmers wanting to get more technology in their ag equipment, and that's right in the wheelhouse of Deere as they continue to innovate ahead of many of their competitors. What's your plan here, or what's your thoughts here on Deere & Company?
Right. Yeah. I mean, what a great franchise in terms of its its runway in terms of growth, that innovation you speak of. I mean, I think we will eventually get autonomous farms, where you basically don't need a human on there, and Deere is going to be right in the forefront of that. And so, in terms of their trajectory going forward, what's that growth going to be? I mean, it seems pretty easy to make that case, and that we're always going to be needing our crops there. So, you have the strong fundamental backdrop with a company like this, and then. You look at valuation, they've got a forward PE of 13, and you're looking for EPS growth of roughly 13%, which gives it a PEG ratio of 1, which is fairly attractive. You got a sub-market multiple. You got, somewhat of a dividend yield, 1.2%, just above that. The worst thing about it, is basically you could say, hey, Deere's up 20% this summer. And so maybe it's run a little bit too far, too fast heading into this earnings report. But if Caterpillar is going to be some kind of a prequel, I mean, they just hit an all-time high post-earnings report. Is that a read-through for Deere? I mean, we'll see after the bell. But technically here we've kind of pulled back to that 50 SMA along with the industrials. Like you were mentioning, we have pulled off, basically $30 off of that high. And so if you feel like technically that's a good sign in terms of near-term support, and yes, it's up 20% this summer, but it's also down, $30 over the past basically 3 weeks. So it's not trading at all-time highs heading into the report. So if you have somewhat of a bullish thesis for a stock like this heading into the report, I was looking at a trade at doing a bull put spread that's basically right around the money, just selling that 420 put and buying the 410 put for protection. The implied move, I think, is around $18. So, look, this credit spread would be within that implied move. But if you're bullish and you go out there and you set up a debit spread, an out-of-the-money bull call spread, you're going to need movement on the stock. If you go with something like a credit put spread like this, if the stock is flat for whatever reason post-earnings, then a strategy like this can also benefit in that scenario.
22.
Yeah, let's break down this example trade you brought us here. The anticipated market maker move priced in by the option market about plus or minus $17 either way on this one. So implied volatility elevated, which allows you to collect more credit on a strategy like this. Going out to the August 18th, so only 1 day to expiration. This is an earnings play example here. Selling the 420 put and then buying the 410 put. Neutral to bullish $10 wide short put vertical. Collecting about a $4.05 credit on it. That's what you can make. Your risk $595 or $595 per spread,
if it goes below 410 at expiration. We've already seen that $30 pullback, Kevin, in the shares ahead of this result. Nathan mentioned it's sitting right at its 50-day moving average. Your thoughts here on the short put vertical?
Yeah, guys, this is a lesson. Nathan's trade is a lesson on trade-offs. And trade-offs occur always in the options market. Nathan has taken the fundamental principles of risk definition, collecting theta, and that third one, which is high probability, and he's tweaked that last one. He's taken his short strikes and moved them closer to at the money. That gives him about 17.5 deltas, gives him a higher level of theta, but the trade-off is he's closer to at the money, and those probabilities have come down. The trade-off is more premium, more potential profit, higher levels of theta. But selling an at-the-money put vertical is different than selling an out-of-the-money put vertical. But neutral to bullish is where this spread will do extremely well. Anything on the upside here, or flat, frankly, will do extremely well in this trade. And he's got, like I said, over $4 in premium that he's collecting. So this is a good big boy spread that Nathan has taken an aggressive posture by moving those strikes a little closer to at the money, Tom.
There you go, SPY.
Yeah, the setup on this, I think, to Nathan's point here is that the stock's already pulled back $30. You've got support maybe at that 50-day moving average, gives you a good entry point here. And that's why you're collecting so much credit, because you're basically selling an at-the-money put here on this example. You do have some assignment risk on that short 420 put going into expiration at tomorrow's close, too. So you got to keep that in mind. Really short-term in duration on this example that Nathan brought us. All right, good look at that. And thanks to Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research,
on this.
for joining us, breaking down markets and
Made a little
company.
cup here.
But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on
Stop
Ross
looking at me,
Stores.
Schwan.
Retailers up over 20% in the last year, and we'll cover data ahead of their earnings with Likefolio. Coming right back.
Breaking out of these downward channels now, even this larger one. But this resistance kind of respected. Kind of rejecting that breakout. Let's see. All right, selling a couple here. Selling a couple more. See if we get a handle. Maybe back on VWAP. I'll get back in. GME had a little pop over VWAP on that move as well. Almost green, actually. Barbecue still down 9.4. We can get a handle, then a breakout. Might see new highs on the day. Be 441 even. Higher. The data they said this morning, I mean, it was good. It wasn't not like super strong data, but yeah, we still never tested the resistance.
But what worries me is that level of disappointment from consumers when they do go into the door and losing ground to competitors like TJ Maxx. So I think, going into earnings overall, we're pretty neutral. If anything, I think you could see a similar reaction that TJ Maxx got to the upside, but long term, starting to get concerned with the experience that they're delivering to customers.
Andy, the comps with TJX are pretty resounding when you look at these stores. But the happiness, could it be? I read a couple articles on Ross Stores this morning, and one of the articles really talked about they have a very conservative presentation scheme, which means their stores aren't real fancy. They don't have expensive lighting. They keep it really low budget, which allows them purchasing power and the ability to offer their products, at consistently low levels. Their comp stores have looked really healthy lately. Could that be, though, showing up in the happiness level, that their stores just aren't as pretty as like TJX or some of the others?
Yeah, I think they've kind of over-delivered in the underwhelming department in terms of the consumer experience. You walk in there, and unlike a TJ Maxx, I think you're right, unlike a TJ Maxx, you walk into a Ross Stores and it feels discount, where I think the magic blend for companies like this is to make the experience feel high end until you look at the price tag. And TJ Maxx, I think, is delivering on that a lot better than Ross Stores. So I think, as Ross starts to expand, I think they're adding significantly more locations over the next year or two. It'll be interesting to see if they prioritize that, kind of physical aesthetic experience in the stores. And then if they learn something from that, which I think they definitely should, given our data, can they walk that back into the existing stores? Hopefully they can, but right now we don't see any indication of that happening from a consumer happiness perspective.
Yeah, Andy, you got a couple questions here for you. The first one being, you're hearing all the inventory issues that a lot of other retailers have had. Is that benefiting Ross at this point? And this is all, and the moves in Ross Stores, is it all going to be based on foot traffic? Because it seems like, I understand they're trying to ramp up their e-commerce just like TJ Maxx is, but these are the stores that you go to, and you have to have foot traffic. And are you seeing positive signs on that front?
Yeah, I think, the digital ambitions are worthy, but I think ultimately with these stores, it's about people walking into the store, seeing and feeling the item and then deciding to buy, because that's the whole kind of discount shopper experience. It's really tough to replicate online. We saw the same out of Five Below. You know, they tried to move to a more digital and had some success with it, but ultimately it's about what happens in the stores. And what we're seeing is that the stores are doing very well. People are talking about walking into these Ross stores at a pace that I think is definitely surprising to us, especially for back to school. So I think they'll have a positive message for this report and a positive outlook.
According to your data, you guys are relatively neutral on the stock going into the earnings report. Are you guys neutral, like where you'd buy it on any dip, or do you think maybe we're going to see another TJX reaction?
Yeah, this is one I think long term we just stay away from and say, I'd like to see you deliver on some of these consumer experience promises that you're making. You know, you got a new CEO coming in, I think, in a couple of years. So they have a big transition underway. Right now, just like TJ Maxx, quite a bit better.
All right, great stuff. Great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for us here on Ross Stores ahead of earnings. And now, Kev, and have you break down a couple example trades here in Ross Stores that you brought us. Go ahead.
Let's bring a lesson to this trade, which is, if you look at the divergence in Ross Stores, Tom, that front expiration at about 119, and then you've got a pretty good drop-off down to 50 in that second week. And so therefore, if you price out that 1 week calendar spread, it comes in between 35 and 40 cents. It's currently sitting right around 38 cents, Tom, for the 1 week calendar spread. That is the August 18th, August 25th. But Tom, if you go 2 weeks further out, all the way to the September 8th and then August 18th, so you get 2 more weeks of exposure to this name, and you get that. Why? Because the September 8th implied volatility is 15 points lower than the August 25th. So now you're going from 119 implied vol to 35 implied vol, Tom. And what's the product of that? What's the end result? You can do 2 more weeks for right around or even less than double the money. So the September 8th, August 18th, and by the way, in case I didn't say it, this is the 120 strike, okay, that I'm using for. Just $5 higher than where the stock is right now. But if I do the 3 week 120 calendar spread, I'm spending 70 cents. If I do the 1 week, Tom, it's 35 cents. So I think that makes the 3 week trade a better overall investment than the 1 week trade. I'm getting 2 extra weeks for about the same amount of money as I was getting 1 week, Tom. Why? Because that 50 vol is still much higher than the 35 implied vol that I'm getting out to September 8th, Tom. So this is just a way, using the Thinkorswim platform, using the risk profile to price these out, to not just do a good trade, do the best possible trade, Tom.
Right, let's break down the first one, Kev, we're going to look at is a short-term call calendar here, where you're buying the August 25th weeklies that expire in 8 days, the 120 strike call, selling in the near-term August 18th 120 strike call. 1 week wide, you're paying roughly about a 35-cent debit on it. That's where you see your break-evens here. Around 110 and 132, that'll probably tighten up. It's probably closer to maybe 113 on the downside, maybe 130 on the upside, where you have still a nice range, and your risk on this only $35. You've got some assignment risk on that short 120 call, but that 120 strike is about what the option market's pricing in on a 1 standard deviation move, about plus or minus $6 in there. So that's the short-term example that Kevin's got here. You're paying 35 cents. There's your risk, $35 per spread. Now let's go to the next one that Kevin brought us, and this is a buying the September 8th weekly. So giving yourself a couple more weeks in that, buying that same 120 strike call, and then against that selling the near-term August 18th week or monthly 120 strike call. So buying a longer duration call, and as Kevin mentioned, the implied volatility level in that September 8th weekly series is only about 35% on aggregate, and then you're selling that much higher implied volatility in the near-term options. There's a risk profile on this one. Now, you're paying double what you paid for the 1 week wide, but you're giving yourself an additional 2 weeks or 22 days in this one instead of 8 days. So you're giving yourself more duration. You're paying double. Your risk is $70 per spread on this one. And you have some assignment risk on that short option that expires tomorrow. On this one also going into expiration at the close tomorrow. So a good example here. You got the same, relatively the same break evens. They might tighten up a little bit because you'll lose some implied volatility on your long options also. But two different ways to look at this. Kevin said this might be the better use of your capital or risk going out longer in duration, but that all depends on what your duration sense is here, because if you're doing it just for an earnings type play, maybe the shorter term one that was 35 cents debit might be the play for you. So I think it's all based on your assumption on where the stock's going to be over a specific time or duration on that one. So good look at two different ways to look at this based on the length to expiration on your long option. All right, let's take a quick break here. When we come back, we're going to take a look at Applied Materials. Stock's up over 40% so far in 2023 into earnings after the close. This will be closely watched as far as the foundation behind making semis. Fast Markets coming right back.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience.
A SPY. Forming a handle here? Oh, I'm totally getting more. Might be. What's up, Psych You Up? Barbecue popping up there a little bit. Only down 6% now. GME kind of sold back off below VWAP. What's RAD doing? RAD came back to VWAP as well. I haven't seen any news on barbecue. Good morning, Psych You Up. I want more calls here, but I want to save my final trade for later. 15 minutes to 1 o'clock. Still have the calls from down here. Some of them. I sold most of them up here at the double top. Yeah, I think we are forming that handle. Going to be a little difficult maybe because VWAP's right there also. Just ride my calls that I have. The whole morning was tough though. Just big candles, big chop. That's tough to trade in. AMC kind of kept climbing there, hit $4. Hold support, new resistance. Ups down 13.5.
To back it up when it comes to the earnings announcements, being able to beat on the bottom line number here. So maybe we see a little bit of a pullback here overall, but there's a lot of traders, a lot of investors, a lot of money managers that still like this name because of its diversity when it comes to the product offerings and its exposure to not only consumer discretionary, but also grocery and staples.
All right, great stuff. Yeah, we did this yesterday or earlier today on MTL, where we were looking at example trades in Walmart and Target, and it was like that pairs trade kind of came into play because Walmart seemed like it was topping out at those all-time highs. Yeah, thanks to Kevin Green, senior markets correspondent here, breaking down the Walmart story, giving up some of those earlier gains. Now let's bring in George Tillis, senior markets correspondent here on the network. George, we're talking AMAT. On this stock's up, about 42% so far this year. They've got big customers in the fab segment of this business where they, give a lot of their products to. But when you look at this stock, is this about AI or what's going on in the overall semi industry, or is it maybe the potential, and that's why we're seeing gains in the stock that, hey, they're going to have a lot more work on their plate moving forward as AI really starts to boom here and chip production?
I think when it comes to Applied Materials and the other large fabrication equipment manufacturers like KLAC and Lam Research, it comes down to the all-encompassing marketplace for foundry and manufacturing. I mean, you can't have equipment and services that AMAT provides to be able to, of course, manufacture semiconductors. So they actually sell to major semiconductor manufacturers like Texas Instruments, Micron Technologies, and you name it. So these are very important companies from a global manufacturing standpoint, and they're really steady companies that have a lot of abilities to balance out their top line sales growth amongst various semiconductor areas of the ecosystem. I think this last year, of course, the huge push to the upside, at least year to date, about 42%, was based on artificial intelligence, particularly 3D discrete graphics chip manufacturers like NVIDIA. I think to print, earnings per share are expected to be down to $1.73 per share by 11% compared to the same quarter last year at $1.94. And even sales are expected to come in at $6.16 billion, down about 5.6% compared to $6.5 billion last year for the same quarter. So what gives? I think it comes down to weakness in the handset markets, the display markets, which include televisions. And the other thing is I think the PC markets have been weak in the past couple of quarters, and that might actually start to rebound. We have to think about enterprise spending in the server and data center markets. Also in the PC markets, I think we're sort of in the inflection point of another PC cycle where people, at least consumers, are going to start upgrading once again after the huge upgrade cycle we saw during the pandemic, which again was over 3.5 years ago. So, this equipment becomes antiquated, and I think there's going to be some demand in the handset markets.
Another alert
the
out
PC
to
markets.
the Theta Farm.
I think the guidance for Applied Materials is going to be very important here. It may not necessarily be AI going forward, but I think they're traditional businesses, if you will,
Nice little
which
bounce on
include
VWAP there.
Automotive, the PC markets, the industrial end markets are still rather robust, because if you look at the stock price, it's performing quite well relative to the earnings and sales contraction that they're about to report when they come up shortly.
George, I'm going to keep my question real simple because it's more theoretical than anything exact. There's a chip manufacturing boom on the horizon again, and this company supplies the services and products for chip manufacturing. Is the street getting this right? Is this stock, set up for really outperformance?
Could still be building this handle.
You're right. The cycle, we're 3.5 years into this cycle, George, and that's usually when these things start to swing up, and AMAT is uniquely positioned for that.
Very much so. Semiconductors go through cycle shifts. It's not just demand shifts, but it's also technology shifts. I'm just giving you an example, but if you look at Wolfspeed, symbol Wolf, it's down significantly because they're having problems manufacturing their 200 nanometer chips for silicon graphic technologies or carbide technologies. That's why the stock is down. So they need of course equipment to manufacture the new technologies that are available. So I think we're going to see maybe twofold here: a cycle shift from a technology standpoint, but at the same time the demand, the endogenous demand for semiconductors, particularly in consumer products like handsets and PCs. So I think that'll be important here. I think it may not necessarily be artificial intelligence catalyst for AMAT, which has been the case this last year. I think going forward it'll be the traditional end markets, and we'll see what they say. But overall, it looks relatively balanced, considering their estimates for both sales and EPS are down relative to the same quarter last year.
Yeah, and we can't forget about the CHIPS Act, as about 39-40 billion is going to be allocated to a bunch of firms as they continue to build out the infrastructure for more semi plants. Also, it's probably right in the wheelhouse of AMAT. Also, all right, thanks again. To George Tillis, senior markets correspondent here, breaking down AMAT. Kev, I wanted to go to you here real quick. I mean, mentioned the stock's up pretty significantly, up over 40% so far this year. Option market's pricing in about a 580 move here. What are your thoughts?
I think, like I was discussing with George, I think this company is one of those key players in semiconductors, but not the flashy, high-profile name in semiconductors, because they supply some of the things that make the semiconductors. But they're a key player, Tom, and they're going to benefit if this cycle starts to turn up, which every indication on the calendar says we're poised to do that. So, they just made a bunch of high-profile announcements about different things they have for manufacturing. I can't even say the names. They're so crazy and obscure. But they're making a lot of announcements. They're a big player in manufacturing of semiconductors, Tom. And so, I think this – and remember, it trades, Tom. If you think about it, their PE right now is below a 19. That seems incredibly cheap for a company that does what they do.
Yeah, and pays nearly a 1% dividend yield if it gets paid out. Yeah. Different from some of the other tech companies that don't pay that. But Kevin, you mentioned that bottoming out in the semi-cycle, and the company also noted that NAND and DRAM Those were starting to bottom out also. That's a segment of the business. George mentioned automotive. That's just a growth machine as far as the number of chips that are going into autos and EVs at this
Now your
point.
first take
So
profit
that
will
may
be at the high of the day.
overlooked segment. So
For the
looked
handle.
at this, Kev,
Retest the
from
cup.
that aspect that, hey, maybe it does go up that
It might not
one
break
standard
out, but
deviation. So I looked at an example trade
that's
in
the-
here that offsets some of the
that's the
costs
hope.
on a bullish type of trade here. So look
Breaks
at
out,
the
I think,
August 25th weekly cycle.
back to
So
open potentially.
Not a pure earnings
Five
play,
day.
but you got 8 days till expiration on this one. Buying one of the 138 strike calls, selling two of the 143 strike calls, and then wrapping it up by buying one of the 144 strike calls. So an unbalanced call butterfly to the upside. You're paying roughly about $1.80 debit for that. That's your risk, $180 per spread. With that break even up at 139.80 to the upside, that's about 90 cents above the current share price. So you don't need a massive move here, Kevin. And it tops out as far as profitability goes right at that short strike at the 143. Give me your thoughts here on the unbalanced call butterfly for directionally bullish trade as an example.
Tom, the risk on this trade is that debit paid. That's your max loss. If you think that AMAT is a bullish tone, you've got a full week. Remember, you've got the rest of this week and all of next week for this to play out. I like the fact that you gave it a little more duration for this move to happen. And then if you do get the big catastrophic move on the upside, this is insulated, right? As you've got the $5 call vertical and a $1 call vertical, which gives you that flat line that you see to the right there, much in the profit area. But make no mistake, this has got about 15.5 deltas, Tom. It's a bullish play. You need the underlying to go higher, not lower.
Yeah, the just broke through to the downside. Its 50-day moving average over the last week or so, Kev. So that might act as a maybe a resistance level to the upside, but that's around 142. So you have a little bit of room to the upside there, Kev. All right, good to look at an example there in AMAT. Kev, wanted to get your take here. We've got futures or stocks turning around here a little bit. We've got 3 of the 4 major indices in positive territory. What should traders be looking for as we wrap up Thursday into the end of the week?
This would have been day 3 of a sell-off, Tom. So if this is just one of those, soft markets that are for buying, if this is a buy the dip market, day 3 is a great day to do that. And so you're starting to see that, I think, in some of the price action. People, dip buyers stepping in here, Tom.
Yeah, definitely. And I think everybody should be watching those yields. That 10-year, if it breaks above 433 also, it's a key level. All right, thanks to Kevin and I here for, that's going to wrap it up for Kevin and I here on Fast Market. But stick around right here on the network as Next Gen Investing's coming up with Alex Coffey and Jenny Horn hosting.
GNS broke below that 50%. Down 22%. Nice to see RAD holding VWAP. Barbecue down 7%, 1840. The space is up 2 1/4. If it flips us into resistance, takes back up to $3. Dish is down 2.6. There's SPY. Yes. Get the breakout here. Testing it. Testing. AMC climbing there. Up 5.3. Kind of rejecting. Can it do it? Took the rest of those calls off. Alright, one more trade for me today. Alright, so now another alert for the Theta Farm members. YouTube, this is an opening position.
this company just goes to show you could pretty much do
Gemini.
everything right. You could raise guidance, you could reiterate your outlook, say you're well positioned for the second half of this year. It still just might not be enough, and perhaps it's because Walmart does trade at around 23.9 times its earnings, which is slightly above its 5-year average at around 22.5, also well above competitors like Target as well as Kroger. So the only name that actually compares to its valuation is a name like Costco. I thought that was interesting to sort of look at the valuation into this print, because Target yesterday rose on what was definitely a report to be less excited about here, but Walmart touched all-time highs just last week, priced very differently than some of these other retailers.
And I think that's the nail on the hitting the nail on the head there piece to this, which is the price performance leading into this, Jenny. It's essentially on all-time highs. A name like Target had been a disappointing price-performing stock, so just not a lot of room for outperformance here. They kind of did what you'd be asking them to post as an investor, and the stock modestly selling off here today, all things considered, given its performance over the last few years, I think is acceptable. What I thought was impressive is that they obviously had pretty nice U.S. same-store sales growth, but they were able to do so kind of in both ways that you increase store sales. One, by increasing traffic, but also by increasing the amount of money each potential person and ticket is spending. So increase in ticket size by about 3.5% and increase in traffic by just under 3%, I thought was pretty impressive and kind of shows the well-oiled machine that Walmart is.
There's a little
the next one that we have here
candle,
on the
not
list,
even
though,
a candle,
not a lot
transaction
to do,
up there on
I would say,
barbecue, a little
with
bit higher.
Walmart in particular,
We're down 5.6.
but you might find some items that have this technology
Jenny's
in
just
them
reporting the
for
news,
sale
Kitty.
at a Walmart.
Okay.
And maybe this name you could say could comparable because it's also outperforming its own given sector. Shares are up almost 94% now on the year, even with a near 18% pullback this month. We are seeing some weakness this week, down about 2% today, now adding to it's about a 0.5% loss week to date. But some positive analyst coverage. D.A. Davidson did raise its price target on Roku shares to $100 from $81, maintaining its buy rating. The firm is updating its model, noting that there is an increase in the higher discount rate, which is being offset by its higher near-term sales and profitability projections as the rollout forward in its estimates continue by a year. They said the challenging ad market could be a catalyst for a greater mix of spending moving towards connected TV. And for its part, they said Roku is working on innovative advertising efforts such as its partnership with Shopify, which could result in higher CPMs in the future. This name, though, more split among those that cover it. We do see 12 buys and 16 holds. There are some underperforms and a few sell ratings. The average price target at around $79 only implies it's like $79.50 right now, so it implies barely any upside with the move we're seeing today. So it does feel like, at least based on the 12-month projection, that a lot of the street thinks this name has run up as far as it can at this point. But I mean, today, D.A. Davidson, $100 a share would obviously imply even further upside from here.
And the stock got like eerily close to that $100 mark post earnings. It has, as you said, kind of been a little bit sluggish in the weeks following, unable to kind of hold on to that pop. But all things considered, it's been a long, kind of lonesome road to recovery here for Roku. The stock was almost $500 a share at one point in the middle parts of 2021. So we'll see where things go from here. Quite volatile at times around earnings.
Yeah, absolutely. And this is a really fascinating story because they obviously report tomorrow after the closing bell. And this is very odd scheduling. Almost no one ever announces their earnings or really any other significant financial news on Friday afternoons, especially in the middle of the summer. And I was actually reading what the street thought of this because now their earnings call isn't projected to end until around 6:30 p.m. Eastern time. And we have seen, I mean, shares have dipped about 15% since the company disclosed the unusual timing of this earnings release. So Deutsche Bank did say in a research note that Friday could very well be the day the company announces it no longer sells hardware. Well, the company is primarily a software vendor. They do deliver some firewall products as well as appliances. In the most recent quarter, though, we saw hardware was around 16% of their revenue. That had shrunk from around 35% back in 2018. The company is also holding their annual sales kickoff meeting next week. There is some thinking that there could be a significant organizational change coming or a pretty major shift in their overall strategy, which then would be announced tomorrow when they report. Guggenheim said that field checks indicate the company did have a strong finish to their July quarter, but the analyst said that in his experience, it's not usually positive when management's actions differ materially from the norm, given the complexity of Palo Alto Networks' business model. It's hard now to be sure of anything. Obviously, we'll get some clarity when they do report, but typically I think this isn't read as like you're going to release tons of positive news, just given the unusual time that they're releasing their earnings. And even they have acknowledged that they're just doing it basically because that's when they had slotted it in. I'm very curious to see if we could see some disappointment for a name that has rallied about 50% on the year. It has fallen about 16% on the month, but has been a relatively resilient player in all things tech.
Yeah, I don't have many thoughts on the game theory aspect as to why they chose this time, but I will provide some insights on what this could potentially mean for someone who's looking at an option strategy, particularly in the expiration cycle that is slated to expire on the 18th of August or tomorrow, the monthly August cycle. To me, a trader is kind of taking undue risks that isn't really necessary if they choose to trade this earnings event using that cycle, and I'll explain why. The last time that you're going to be able to actually trade those options is going to be at the closing bell tomorrow afternoon, but that's going to be before this earnings event actually takes place. So you're going to have all that risk going into kind of assignment and exercise and really not know where this stock is going to be. To me, this is sort of a risk.
Okay, coffee. I think he missed his coffee. Lasharoni. I don't know. Could still be doing this the handle dance. But maybe not, as the handle kind of rejected the cup. I'm not taking any positions here though. Sitting right in the middle. Pretty tight range today. The kind of trading I'm doing.
Play for some. So those are really my thoughts on on SoFi. It was kind of cool to see there for a little bit there. It was exactly unchanged on the day. Not often that we get to talk about stocks that are literally up or down zero at the time we're talking about them.
I know I was going to say it was our lone green name, but then it moved basically unchanged on the day, so I can't even say that at this point. But we'll move forward today with our upvotes. I think the clear names are ones that do have earnings behind us.
There's
now
the sound guy messing with Jenny again.
SoFi's relatively
Jenny.
lower price stock. We'll be looking at Walmart next, as well as Roku. We'll be breaking down the technicals as well as some example trades. Stick around. Next Gen Investing. We'll be right back.
VWAP dancing again. RAD's hanging out above it. GME just below it. And barbecue at 1851. Some guy got no chill. HE down 16.6.
that price was making new closing highs. RSI, our measure of momentum, was actually trending downward though. So that tells us that the momentum was slowing as we headed into earnings. Not really uncommon, but you
Buyback to avoid delisting?
Strong continuation of an uptrend. You want to see people buying into the shares before earnings.
I don't understand.
In that name, that would be really a more ideal situation there. So support and resistance. Support at the 63-day EMA, a bit below where we are now, near 155.75. If that breaks, perhaps around 154, based on some old highs and lows from back in November, March, and April, and then some lows from May and June. To the upside, yellow 21-day exponential moving average comes in near 159. That would be a point to watch, or perhaps the 160 level, based on before where we had some high.
I guess they could do a share buyback and then cancel the shares.
Right, and Rick, I think a really great breakdown, and a name that still is in a relatively strong uptrend, just obviously giving back some of that strength today and this week now at this point. So now in trading this name, Alex, walk us through what you're thinking. We have this major event behind us. I will say they signaled some pretty strong trends for the second half of this year. So walk us through a more neutral to bullish leaning example trade.
I'm trying to figure it out because I don't understand how that
out the actual announcement, what
keeps
they
them
had
from
to
being
say
delisted.
could be construed as pretty positive. They raise the guidance. They provide pretty nice numbers for the quarter reported, yet the stock's lower. An investor may see this as an opportunity to get into the stock, particularly if they have been watching this one, watch it go to new all-time highs, and now starting to pull back here a little bit.
What kind of trickery
This is a
going
strategy
on?
that would assist a trader or investor in doing so in a risk-defined manner. So looking at
Highs
selling a
coming
book vertical
down.
below the market, Rick had mentioned sort of some heavy activity around the kind of round numbers, the 155
That's
area
weird.
being one of them that he mentioned. So this particular strategy centers around that. Selling the September 155, 150 put vertical. If you're able to get about $1 for this, it'd be 20% the width of the strikes. It'd create a 4-to-1 risk-reward ratio, in which a trader would be risking $400 to make 100. The break-even would be 154. And as we look at the risk profile, it's going to be that classic elongated Z that we know coincides with vertical spreads. And of course, we start in that max profitability zone. Walmart is not a high volatility name. And so with a name that trades with relatively muted implied volatility, you can't expect extreme amounts of cushion or premium collected. And so that's going to be a function of implied volatility in that option pricing. It does have a little bit of a cushion here. Break even down at 154 is, of course, below the current share price. And it does have risk definition with that worst case scenario below 150 being a $400 loss if these options went through assignment and exercise. So high probability trade, one that is looking to basically add exposure
Now it's at the
on the long
right
side
shoulder.
into this downward trajectory post
Let's
earnings.
inverse head and shoulders.
And now to shift gears here and look at another name that is making a similar move to the downside today. Roku shares are down about 2% here, but we did get some positive noise out of D.A. Davidson that it raised its price target to $100 a share, which would be about $1.50 ahead of its 52-week high, which stands at around just $98.50 now. So, Rick, again, walk us through what you're thinking here with Roku. We don't have earnings in the near-term horizon, but this analyst today sees shares coming up and running for over the next 12 months, even with its near 94% rally year to date.
Right, it's actually more than doubled up its yearly lows near.
But nice head and shoulders up here actually on VWAP. I wasn't even paying attention.
From that point, and that's even
that
after
handle
we
that rejected
quite a bit
a
from our
little
last
shoulder over
earnings,
there.
Fueled rally that we saw there. We were up 31% in one day after our last earnings event. So that was pretty impressive. It's been kind of whiplash price action since then, though, because we did top out around the $98 level. That was an area that was around kind of where we saw prices top out a couple times in the past. This chart actually goes back a little further than 1 year because I wanted to illustrate that for you guys at home. And we can see as well that ever since we hit that $98 level, we fell off pretty notably. We're trading below our yellow 21-day EMA, but our purple 252-day, our longest term moving average that we follow, that was supportive there. So we did hold on at that point. We also held on above the old closing highs that we established around February and around May, June, around that point as well. So that was maybe something a little bit more encouraging for the bullish crowd in this one, that we didn't break below a couple of those levels, even though we did reach that 21-day EMA. Volume profile doesn't really show a lot of clear nodes. It's actually kind of even from about here all the way up to that $98 level. Not a lot of clear spikes that we need to be on the lookout for. So not much help there in terms of support and resistance. It could be a pretty fast trip upward if we start moving up again, because there's not a lot of clear resistance levels to keep an eye on. RSI, however, is shifting more toward the bearish side. We're breaking below that 50 midline here. Not seeing a big move beyond that point just yet here, but we are more tilted toward the downside in this, according to this indicator right now here. It'll be interesting to see where we close. If we can recover a little bit more, we may not close below that 50 midline on the RSI. That would be a rather encouraging sign, I think, because it would mean that we also held above that 252-day EMA. So that's the support point, that purple line near 77.55. That's really what the bulls would want to see price hang on to heading into the close. Resistance at 80.75 based on our 21-day EMA there in yellow. That would be another point to watch.
Right, and Rick, as you can see from the chart you just highlighted, we've seen a pretty sizable pullback from those highs when they reported their earnings. We've fallen about 18% now month to date, but we will leave it there. Appreciate the technical breakdown, as always, Rick Ducat, our chart master. So now when trading this name, Alex, walk us through the same thinking as this analyst today, as a $100 price target for the next 12 months, and leading into a more bullish example trade.
Yeah, Jenny, looking at a strategy that would benefit from a move higher in this stock, taking advantage of the recent pullback, and really only asking for a test back to the levels that we were just at within the last couple of weeks post-earnings. Looking at buying a call calendar up at the 90 strike, giving this one, though, plenty of time to actually have that happen. Selling the September monthlies, buying the October monthlies. $2 debit means $200 in risk on the bullish strategy. If we look at the risk profile, we know it well. It's almost like a mountaintop that peaks out at our strike, and we talk about this quite often. This is more about precision than it is just directional accuracy. So if you have a spot in mind, be that in Roku or any other underlying that is optionable, using that kind of price point for your time horizon is a good way to sort of use as a guideline for your strike selection for these particular strategies. And so in this case, we just happen to be illustrating it using the 90 strike, and that 90 strike on that October-September time frame leads to a $2 debit, which is how you get that $200 max loss.
Right, I think a way to play, obviously, Roku right now, we don't have any near-term catalyst, but this name typically moves just based on some of its historical price activity. It's never one that is shy from volatility, but we will leave it there. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now coming up next, it's time for FOMO. So we are looking at a name that is holding on to its gains on the session, that is Adobe, after B of A sees this name being an
GNS popping up there to VWAP. I did get some puts. We broke that right shoulder. Would have been better to get him on this head and shoulders up here, but I wasn't ready for that. I want more confirmation. We're getting out of this bullish channel, cup and handle. Now we're back in this bearish channel. Potentially, we'll see what low of the day happens. See if we continue down this trend. Make a new low. Bubba Hearts Flesherino. Eyes coming down. Now you can kind of see this intraday head and shoulders here now, maybe being built. Also, this inverse cup. Well, you might get a bounce on low of the day for a handle. I did my final trade though, so take some off low of the day, maybe. Closing a couple there. Haha, GNS popping up. Above VWAP. That's a nice bounce on that support line there too. You see that? Double bottom was there. All good things. I'm waiting for a pullback to VWAP. I think I'll grab some shares of GNS. At 11.2. I'll just get some right there. I'm closing out of some of those SPY puts. Still kind of in a downtrend, but it's a wedge. A wedge here on GNS, so typically bullish, but you don't know until it's broken out. Because the sellers are selling at a lower and lower price, but the buyers are buying at the same price. So that's where you get this wedge forming. So you want to break out of this. It's showing nice support there, and I like the bounce on this trend line we drew from way down here. Looks all weird right now. Why does it look weird? I don't know. It's on a different time frame. Maybe it's on the 5-minute. Why is it way up there? People. Dang it. That's kind of a low of the day there on SPY. Yeah, pretty much did hit it. So see if we get a handle. And then a breakout. I'm going to leave these last few contracts. I sold half there at the low. I don't know where that trend line comes from, but it's working. I'm gonna put a stop on these shares too. Kind of a big range, unfortunately, but yeah, breaking that low. Really, I'd say even breaking this low now. Excuse me. Watch it for a little bit. RAD's coming down. Dang it. RAD. Nice, Bubba. Yeah, we'll see. We'll see if we break the low. If we do break the low, I mean, you still have an hour and 20 minutes, so today could still end up being a big move. You know, this candle could definitely grow. Or it doesn't. We just chop around until close. Definitely possible as well. ABNT down 2.7. New low of the day there on SPY. Nice, Christopher. Well done, man. Yeah, if you had more conviction on it, like buying that 50% you could have done, buying this double bottom. I thought about getting more there. Kind of wanted to see more confirmation. I was late, but yeah, it's like that trend. So, down to me, it can't still break down. I mean, that's why you need stop losses and have risk management. Next confirmation that I want is a break of this resistance. Something like that. If you wanted to add, that's where you'd add breaking this resistance, and then you'll get some kind of pattern, most likely. Kind of got a shoulder that's built up here. You've got a head. Maybe build another shoulder and that gap fill, and that would be good. All above this resistance. SPY flushing down. Woo! Big old flush on SPY. I'm gonna sell. Sell another one. Got a lot of time left. My last trade, so I'm like trying to scale out very slowly. Till an hour and 15. $438.29, $437, maybe somewhere around $437. It finds its resting place. Still thinking GNS could move back to VWAP, especially by end of day. Maybe we get more. Whiskey definitely helps. Definitely heals. Thanks, Psych You Up. Like my voice sounds better? Yeah, it's kind of moved more into my like higher out of I don't know. It's dissipating in my body, basically. So it's moved down a little bit, maybe. It's in my chest, getting the cough, but out of my throat. And it's moved up also, like into my head. I'm snotty and a little bit of, yeah. But my eye is better, and that is thanks to silver. I started feeling better like 30 minutes after I put some silver in it. So I've just been doing silver drops, I don't know, 2-3 times a day. Whenever I feel like laying down. Who would have thought the minerals here on Earth to actually take care of the humans also here on Earth? Keep catching the end of that. Silver stacker on his eye. Yesterday at close. You like to kind of collect your options, don't you, Bubba? Like a collector. Delcium? Interesting, Busy Bee. Worked pretty well. Ten minutes to 2. I'm gonna take one more of these off. If you get a bounce and retest to that level or anything. Just kind of bear flagging for now, which isn't a great pattern. Prefer like head and shoulders. Bit more than cap fill. Makes you feel better while you have a cold. This is like a COVID cough though. Not normal stuff. I don't want stuff to feel better either. Stuff to fix it, like silver fixing my eye. I feel fine. That's the best part. That volume on Turca. What happened with EBET today? Let's go LQR. Benadryl. Yeah, if the sickness is keeping me up. LQR. Yeah, it's not going much. Let's see. Needs to break some of these resistances. Let's see, back up here above $2. Not putting out too much yet. Good volume today though, huh? Look at that. A good start. AMC news. Well, they're getting ready for the reverse split. So you're seeing a lot of stuff go on, I guess. Yeah, if sickness is keeping me awake, I'd definitely take like NyQuil or something like that. Or yeah, Benadryl even. I've tried that. It doesn't work as well for me. It's coming up here. Let's see if it finds resistance. 439, right around there. In New Orleans? Oh jeez. I just call it a COVID cough because it's abnormal. Which I think some way that COVID has affected our immune systems and the viruses and sicknesses floating around kind of had an impact on all of them. There's your resistance, potentially. You could get GNS. It's I picked it back up. Yeah, I mean it's retraced that 50%, and it's shown that support twice yesterday. Kind of dipped below it, but it's not perfect. So showed it again twice today, and then had a nice bounce on there, as well as this trend we built back here. It's bouncing on that also, so it looks good. Might just find resistance up here and then sell back off, so you got to be prepared for that. But if it can break out of this resistance with maybe a shoulder over here from the shoulder here, that'd be something to add to. But I picked up a little, and I'll probably stop out. Probably back down here. Yeah, I don't want to see us retesting those levels again. So probably like, I can tell you exactly where my stop's gonna be. Mess me all up. But yeah, I jump back in. We'll see. The shareholder meeting is over, so that catalyst is done. Had a sell off from it, which I kind of said yesterday could happen. Now just could trade sideways for a bit, and then hopefully rally again before the next catalyst of the spinoff, which I'll probably sell before then, the ex-divvy date. I want to go retest again. Last little retest. We'll give it to you. We'll grant it. For 120. Not so fast, Christopher. We've got VWAP still. Wants that safety of VWAP. See if it finds kind of yesterday's support today or tomorrow. Or at all. It might not. It might stay higher.
Cisco Systems up about 4%. Here's a look at the numbers right now in the major averages. The S&P 500 is down 0.25% today. For this month of August is down over 4%. The Dow is down 0.33% right now at 34,659. The Nasdaq is down 58 points at 14,818, and that's down almost 6% for this month of August, and the Russell down 0.5%. As you take a look at the futures products here, oil and gold and the VIX. The VIX, by the way, is at 1717, so that's been creeping higher with a big story on Bitcoin, of course. 27, yeah, I said it, 27,920, down over 4% today. We're going to be talking about that in the show. U.S. dollars gaining a little ground, 103 and change. Gold, 1915 a troy ounce, and oil, 80.30 the barrel, up 1.1%. And for some of these big stories in the markets, we welcome in Kevin Hinks, co-host of Fast Market. And I definitely think that we're watching what's going on for Bitcoin. This big sell-off, what's it down 7 out of 8 weeks, something like that. And that 27 handle, what's driving that? Is there any clear picture or why this is happening?
Well, I think the news flow is hurting Bitcoin in terms of, you know, the Fed minutes came out yesterday, and the general idea, Nicole, is that interest rates are going to stay higher for longer. And as the economic data continues to come in on the strong side, you see the 10-year yield creeping back up towards the October 21st highs of 4.33. We got up to about 4.28% here was the high today. So it's bumping up against those 52-week highs in the 10-year. And that, and the overall thought that interest rates may have to stay here for longer than thought, is basically weighing on Bitcoin and giving investors little reason to jump in here for speculative assets on the upside, Nicole.
Understood. I mean, it really is unbelievable because there's so many people who are hoping Bitcoin goes right back to 100,000. They're going to need some serious catalysts to get back higher past 30,000. That'll be the first step. In the meantime, let's take a look at some of the healthcare stocks. Of course, we have the big CVS story. Tell me about that and what you're watching.
You see a lot of hate for Mullen?
CVS down almost 10% today as
I don't see a lot of hate for Mullen.
on the move by Blue Cross of California, or Blue Shield of California, is going to be about $500
But yeah, it is
million
crazy how much it drops. It's so much volume.
to them. What are
What
they
you mean?
doing? They're going to keep CVS, but
Wild.
only for the most extreme cases.
There we go,
The other ones,
Spy.
they're moving over to the Mark Cuban Amazon plan that they think will
Mark Cuban?
save them money up to
Oh, that's
$500
right.
million. So that move helps Amazon, and this Mark Cuban entity hurts CVS, as you know. They run several businesses when it comes to healthcare, Nicole. This is a big hit for CVS. You see the stock down almost 10% on that news.
All right, Kevin Hinks, thank you so much. Great to see you. Thanks. Two big stories today. Appreciate it. All right, let's get a look at the bigger picture. Joining me right now
Twitter
is
sentiment,
Ahmed
really?
Risco, Chief Investment Officer of Insignia.
Just because there's so
Thank you
much
for being
support
with us.
for it
I
on
mean,
Twitter.
We're talking about the Fed, so let's start
You
there.
don't have a bunch of haters without a bunch of
how's
lovers.
The Fed's moves, or
They're just all
maybe
trying to
no
counter all
move
the
in September,
hype for it.
Rebecca, your thoughts? Where do you think they're
Like
headed?
all the
and
hate for
where do you
GME.
think
It's
they
like,
should be headed?
that's just because there's so much support behind it.
I probably would have sided with the two Fed officials that did not want to raise rates at the previous
Or I could be
meeting.
wrong. Like
That
that's just
being
what I've
said,
seen.
right now, the market is pricing in no.
If there are just haters,
rate
it's
hike
maybe because they
at
lost
the
a bunch of
next
money on
meeting
it.
in September, and then only a
Always that
30%
possibility.
chance or so of November. We agree with that pricing. We think that's pretty much
Management's
in line with
probably
where things
awful.
should
I
be.
don't share
We think
buyback
the
to
Fed has hiked
keep from
rates
delisting. I
for the
don't
last
understand
time.
that.
Although I do want to point out there is a rising chance, but still not a base case, that they might have to incrementally raise. But we don't think it's going to be a substantial market moving event if they do.
Right, understood. Because what's another quarter point?
Exactly.
What is another quarter point?
Exactly.
But, you know, on the one hand, I feel like we're so numb to it because the trajectory in which they raised the rates, and in many of those cases, it was 75 basis points. But there is some significance to a quarter point.
There you go, new low on the day
But I
on
do
SPY.
see what you're saying, that the market could probably absorb it at this point. Tell me a little bit about a quarter point raise. What jumps out at you is what could happen.
Lushy.
Yes, so what we're afraid of and
Well,
what we
2
think would be a
hours.
sort of risk that investors would have to start accounting for, but again, not our base case, is a
I'm gonna
new
hold these
rate
puts.
hiking cycle.
The Valhalla.
So whether they raise by another quarter point in November or not, we think that does not ultimately change the monetary policy landscape, how restrictive monetary policy already is. We think what would potentially hurt would be a rapid
Walmart
increase
earnings.
in
Yeah,
or
we
new
trade
rate hiking
TVLT. It
cycle.
is kind of an interesting one.
Right. Oh boy, imagine. So let's get to the big picture here, because obviously we got in our jobless claims.
Got that support, maybe.
You know, fewer than 250,000. I think that's sort of been a level people watch. Recession worries are still alive.
I'm gonna not have a coffee today.
Where do you stand on
Thanks.
that?
Yes, so we think
I was slowly weaning off,
recent economic
having
news
just a couple
is
days a
actually
week, and
pointing
then
us to no recession. In fact,
got back onto
our
every
base
day.
case remains no recession in the United States over the next 6 months. However, over a 12-month horizon, so let's say further leading indicators are pointing to material weakness in the economy. Now, I do want to point out, even in case of recession, we see a very mild one, because the underpinnings, the fundamentals of the U.S. economy are quite strong, particularly in the labor market.
So at this point now, what are you watching most closely when you think about investing, and what investors should be watching most closely?
Yeah, so we think what investors should be looking at most closely are these sort of forward-looking indicators of inflation expectations, both market-based and consumer-based ones. If you look at what are called the five-year break-evens and the 10-year break-evens, they took a marginal tick higher last week. They've since given back about half of those gains. We want to see those anchored, and we want to see those stable. In terms of survey-based measures of inflation expectations, you have to look at things like the Michigan number. We had an FIIB, a small business survey last week that came in slightly hotter, so we don't like to see that. However, it's just one print, so it's not a trend so far. But we're sort of keeping an eye on these forward-looking indicators for inflation.
Right. At this
Just made some
point
more coffee
I
now.
mean, do you look abroad too?
I know.
We do, and we've had a pretty, let's say, strong overweight ex-US so far this year. That has not played out as strongly as we expected in some markets. But the bottom line is that we still see markets outside the United States still being historically cheap versus the United States. So for a long-term investor, it definitely makes sense to have increased allocation and exposure to these markets.
Right. What else is on your mind when you think about the sectors, for example, and the action that could happen in the different areas?
Yeah, so we've been kind of rotating or increasing our exposure to quality throughout the year. It's something we continue to expect to be doing. That's kind of a defensive play.
It's pretty
One
much
sector
right on our
that
line
we
there.
recently did some
Pretty
purchases
good
in
support.
is healthcare. Healthcare
We'll
tends
see
to be
if it holds.
a high quality sector, means these companies have high return on equity, and they have low leverage and low debt levels, which means that they tend to perform better in environments where rates are higher for longer. And that's definitely something that we do expect. We don't expect a sharp cutting cycle in the Fed in 2024. The market has given up some of those expected cuts here over the last couple of weeks. We think directionally that's the correct bet. So if that's the case, you want to be in stocks and sectors that perform well, even though rates will stay higher for longer. And quality is one.
Yeah. What about the Magnificent Seven? Just quickly, I figured I'd get a thought there.
Well, don't have a view on those specifically. Sorry.
Yeah. How about bonds? I mean, or trying to grab some of this rate, these yields.
Yeah. So the bond market, we especially like the 10-year at this level. It broke above what we thought is fair value just recently here. So we think any level above 4.25 on the 10-year is an attractive place to be. If you were to happen to see it hit 4.5%, I'd be that much more aggressively buying it. So we think this is a good level to start taking on some duration risk.
Right. Ahmed Risco, thank you so much of Insignio. Appreciate it. Thank you.
Thank you.
Later this hour, Gambling.com Group CEO and co-founder joining us to talk record revenue, why the company is increasing its full-year outlook. And the CEO of Celsius Holdings will join me to talk live about this energy drink, the rapid growth, the record quarter, new partnerships.
And GNS back below VWAP now. We'll see. It's a fickle stock. GNS talk, well, it looks like it found support on that 50% retracement, so yeah, that's basically it. Also found this trend line. Two good things. Next level would be to break this resistance on this downtrend. But gotta have good risk management if it does break below some of this stuff, wherever you see fit. Buys coming down more here. Hour and 45 minutes to dump. Oh, SPY just broke that level. Weird little intraday move on GNS. So strange, this one. Kind of like mulling in that way.
Price that transaction. We priced that at 9.25, and as you can see today, we're over 14. So that was really an important stepstone to enable.
Yes, EBET. EBET's down 22.
Sorry, we're having a little bit of connectivity issues, but what does your company do? You don't actually do the gambling, and you have gambling.com and the all-new casinos.com, and you connect folks that want to gamble or bet, right? Tell us a little bit about what your company does, and gambling.com, casinos.com.
Sure. So what we do with gambling.com and all of our websites is we help online gamblers find the best places to play online. So particularly in the US, you've got different states with different rules. You can't bet on sports in every state. You can in some of them. And the names of the websites that you can bet with are different in every state. And every website, of course, has different promotions, different things that they're good at, different things that they're bad at. So consumers of online gambling typically want to understand, the best place to play for them, for whatever their specific needs are. And that's what we do with gambling.com. But we've got over 50 websites in the group, and the latest and greatest addition is casinos.com.
Had a big move up.
So we acquired that domain name last year, and we have formally launched a new website for casinos.com.
Looks like it's probably going to keep coming down.
It's going to do a lot of this.
I don't know
much
though.
of the same thing that
Not
we
a
do
whole
with
lot of
gambling.com, but we are going to
patterns
be
to look
able
out
to
for.
achieve
I don't know what the move up
what we
yesterday was
did
from.
with gambling.com over the
A
space
lot of
of
volume.
essentially
It has
a
less volume.
decade
Might end
in a
up
couple
coming
of
down to
years,
fill this
we think.
gap.
So, the business model at the end of the day is the online
Got a
gambling
couple
companies,
support
they
levels here
pay
though.
us for referring
0.55,
online gamblers
0.5.
to them. It's
Then the
much the
gap fills
same
at
as an
0.4.
Expedia or a booking.com.
Too low there
If
on
you book a
SPY.
hotel through them, the hotel is obviously going to get is going to pay a commission to Expedia.com,
Contracts are barely moving.
we do the same thing.
And I know you have bookies.com
Too deep in the money,
as
maybe.
well. Tell me a little bit about, when you think about the competitive environment, you have this duopoly of DraftKings and FanDuel, you have MGM and Caesars, you have what Penn is now doing with ESPN.
I don't have a good read on
Is
EBET
there
though.
room for everyone? Do you see more mergers and acquisitions? Where do you fit in the landscape of all of that?
Volatile and a
There's
ton of volume.
absolutely room for
Could
everyone.
move up tomorrow also.
To be honest, there's room for a lot more players in the space.
Tomorrow being Friday though,
exists
profit
today.
takers.
It is a
I don't
very
know.
unique
Usually that's red
situation
on
in the United
stocks
States
that
that
made
you
big
have
moves
two
during the week.
operators, FanDuel and DraftKings, which have such a high
Barbecue coming back down to
percentage of the
VWAP.
market. Outside the U.S., online gambling has been regulated for far longer and is much more mature in many of these European markets, such as the UK. And in those markets, you don't see this pattern of one or two players dominating the market. So we think in time it will be a market, and that there will be a lot of newcomers entering the market to have a go. It's a really nice and fun and interesting industry, and it attracts a lot of
You're wondering if you
entrepreneurs,
should
and it
sell or
attracts a
buy
lot of
or
investment. And it doesn't have to be enormously
what
capital
yacht?
expensive. You don't have to
They
partner with
kind of keep
ESPN
changing with the new
to launch a
yachts that
sports
come
betting
out.
website. Now,
I'd
of
like
course,
something that's
you can do that too, and
fully
we think ESPN Bet is going
self-sustainable.
to be a big success,
So
and we
solar,
look forward to helping ESPN
maybe kite
and
kite
Penn,
powered
their
also.
partners,
Maybe
drive new
a
player acquisitions.
maybe a
and
sail,
will
maybe
be
a
a key
wing,
priority for them,
maybe
no
hydrogen,
doubt, as a new operator
maybe
entering
all
the
that.
market.
And
just
the yachts that
quickly,
come out that are constantly kind of
legalization from
changing, and
state to state.
new ones are coming
you
out
have
and stuff.
places like
So
Kentucky coming
catamaran,
along and North Carolina.
at least probably
Where
60
do we
feet,
stand on regulation and allowing
self-sustainable.
gambling of different sorts? What do you watch for there?
So the first wave of regulation in the U.S. over the past 5 years has really been about sports betting. You've had, over 20 states regulate online sports betting, whereas you've only had a handful of states regulate online casino.
14 cents realistic on EBET?
From the industry's perspective, online casino is really where the money is at.
Yeah.
We really look forward to additional online
Yeah, I mean, if we
casino
break
states coming
this
online.
high, it made.
You've got
Then
Indiana,
yeah, I would say 14
Illinois,
cents for
Iowa,
sure.
and New York, all kind of having
Maybe even
realistic
more.
conversations about
I don't know what the
regulating
catalyst
online
was for this
casino.
at all.
So
I still don't
that will be
actually.
the next big driver of growth
Well, if
in
anybody
the
does.
US. California and Texas and
Is it because
Florida
Coin
are
is
the
approved to sell
big
crypto
states which have
futures?
not come online yet.
Maybe.
That's going to take another couple of years for California and Texas. Florida, there's a court case kind of unfolding now with the Seminole tribe, which is going to bring their Hard Rock Sportsbook to Florida, hopefully. But yeah, the next leg up in the industry for everyone will be.
Yeah, the silent
as
yachts
wave
are
of states
there.
regulate,
They're one of
and
the
hopefully online
early
casino
ones.
in addition
There's been a lot of new ones that have
Okay, Charles Gillespie.
maybe not
thank
as
you so
far
much
down the
for
road
being
as silent yachts,
CEO
but
and co-founder of gambling.com group.
are
Thanks
much
so
more
for being here.
progressive with
Coming up, we're watching the 10-year
their propulsion
Treasury yield
and
how it's influencing
how they
markets and some factors that you want to
how
consider.
they capture the
We'll look
energy
at all the
and
stocks
store
in
it
your
and
portfolio, and we have the Celsius
transfer it.
deal coming up too. Coming right back.
Like this one on my. This one. Can't remember the name of this one, but yeah, these actually pop out, these wings. Those are solar panels in those two. A lot more solar in this one. Also the hulls. You've got this old World War II style, I can't remember what it's called. This goes like crushes through waves much better, so you get a lot less porpoising kind of breaks through the waves. But yeah, there's been a lot of other designs since silent yachts. Even though I like the silent ones. Last one I looked at, what it was called, had a the interior space was just really cool on it. That was my favorite part. It was like indoor outdoor living basically, where the whole like kitchen and living, the galley and all that, the glass doors just like slid open, so it was basically all outside too. It was really cool, and then you could also just close it all up. But yeah, Alva Yachts is another one. ALVA. There's a lot now. Like, given all these new ones that are just pictures, it's like once you're ready to have, you have the funds and you're ready to buy it, you're not going to wait 5 years. And then your choices are going to be much more slim. Oh, it's Whisper. Is it this one? Yeah, this one had that cool design. It's a little smaller, this one. I guess they're coming out with the 60. But the ones that don't have sails, like it's just electric motors and solar, you can rig kites onto those that take up hardly any space. It just basically tethers to your bow on this big powered spool. You just let out this kite, and then you can control it with a remote control, or have it automatically do like H patterns and pull you. It doesn't pull as good as sails, of course, but takes up like no deck space. It's pretty much all automatic. It's way easier to manage, way easier to maintain. And then they also have like wings. The wing design is cool too. It takes up space, kind of like sails, but I think it's much easier to operate. Here's the Whisper yacht. I just really like this. Yeah, they just changed their website. Just the whole indoor-outdoor area is like, you then just have basically like this huge covered patio that you can totally close off. But that's all open up to all your living space. That's cool. You can see it there. Then this all closes. We're starting to do like the wings. I gotta check these positions. I might be closing them here. Yeah, alright, I'm closing out those puts. I'm out. They're starting to do the wings on cargo ships, or at least talking about it. Like these huge rigid wings. We'll pop on GNS there too. Also the kite system, they're starting to use those on cargo ships also. Just like this kite pulling this ship. I mean, given they're still using their engines and stuff, but it helps. Especially if the wind's right and it's strong. Nice bouncer on GNS. Market might keep selling off. I kind of broke that trend I wanted to hold. So I'm out. Not bad. Green Day. Man, it was a battle. Somewhat of a battle in the beginning. We had a good trade here. I bought calls on the low, the retest, and sold most of them up here. Held on to a couple, and then just, I think, closed them out here. And then got back into calls, then got out, and then just got chopped through here without any patterns, which was bad. Fortunately, I got back into calls here for this cup. Closed out some here, closed out the rest here, and then didn't get puts yet. Got puts down on the break of this level, break of this right shoulder. Here's a shoulder, here's a shoulder. Got puts there. Those ones I just closed. So ended up still working out today. Look at that bounce on GNS. Need to stretch out my trades even more. Even more stretching, so I have more time between trades, 2 hours or so. GME is almost green. Yeah, that's the thing with me too, Random. It's like the technology is continually changing. By the time I get one, it's going to be, you know, it might be hydrogen. It might run on my own poop. Who knows? With a composting system that gives me thermal energy. Kind of 1 DT my whole account. Too wet. So 10 more times. Monohull. Yeah, there's spike them no more. I know it seems silly, the kite, but yeah, I mean they're huge kites. And they do, I mean they have a lot of pull. So the surface area on the kites is like the amount of pull you get basically is way more than a sail. It's like 4 or 5 times, I can't remember the number, per surface area. So given your surface area is way smaller, but they definitely have a pull. It's an easy thing to retrofit to these cargo ships, you know? Now the wing thing, that's a bit more hardware. That was it. Sax Parete. Thing kept selling off. Aye. What was that about me holding those puts till Valhalla? And the Yahtzee had 2 or 3 knots roughly. Oh yeah, the kite. Yeah, I mean that's a very variable based on a lot of conditions, of course, but yeah, you can grab a couple knots out of it. Which on those electric cats, that's a lot. I mean those things are only cruising 5 knots, 6 knots. And if you're trying to just do it on solar, 2 or 3. Of course, that depends on the wind and current and all that, but yeah, it all helps. Like barbecue going back to VWAP. GNS back to VWAP. RAD kind of selling off some more. Buy, retesting the lows. Let's get a bounce here.
All four still holding above that. So again, the ES a pretty good representation of the other majors, but this comes in reaction to stronger than expected data. We're seeing the long end of the yield curve really reflect concerns about
EBET.
inflation being entrenched and the Fed's
It's down 25.
longer or higher for longer.
Yeah, it's not
really
looking great yet. New low there on SPY.
Itself in what we're seeing in terms of price activity here.
He wants to keep filling this gap.
Thank you for that. A quick
I know what
note on bond yields.
Imagine.
Where do we stand there, and what are you watching? Quickly.
Yeah, I think that's what's behind it. I mean, a big part of it, you know, it seemed like a couple months ago we were so focused on the short end of the curve, more closely tied to the Fed. Now it seems like the focus is on the 10-year and even more so the 30-year. I'll show you why.
Living half your
here,
power flying
first and
kite.
foremost,
Yep.
the VIX, which has been on the move higher, reflection of the indices up to 1742, and investors' concerns. Why are they a little bit uneasy? Because we've seen treasuries
Look
at
for
this rolling over. I've got the bonds on the
05
left.
or
nearing
maybe
that low
support
from
on
last
EBET.
fall, the 10-year
That
on the
breaks
right.
and
Again,
probably a
we've
gap
been
fill at
kind of
04,
bouncing and
15.
retesting this 50-day moving average, but the last couple weeks here really accelerating to the downside. That means yields are on the move higher. Bonds,
Premiums
you
are
have to take
good
out
on
that low. Look,
Hawaiian
the
Electric.
30-year took out that high from last fall up to 4.42
High.
here today. The 10-year on the
High
right,
IV.
not far from it. And just kind of tie those
So,
conversations
selling
together.
premium on
We've got
these.
the 10-year yields, the 30-year yield, again, on the top half of the screen in this
Could get
instance. And
calls.
while we were kind of doing this levitation act for a while over the last few weeks as bond yields work their way higher, now you can see how it's starting to catch up and providing a little bit of headwind for
Like
stocks.
way out in
Definitely
time.
something to watch as we head into the end of the
But
week.
you're paying a pretty high premium.
All right, Ben Lichtenstein, thank you for that. Really appreciate it.
Worried about 10-cent average?
For our featured guest
You'll only be
here,
worried if you
we're
didn't have a
looking
plan
at
when you open that
Celsius
position.
Holdings, which has been soaring, hitting new highs recently after a record second
And
quarter.
so you
Joining
literally
me
bought it
right
here?
now, John
Or was it a
Finley,
long time
CEO
ago?
of Celsius Holdings. Thank you for being with us.
Glad to be here. Glad to be here.
Amazing. Another record
mean,
quarter when you look at revenue jumping.
Your call, how you
and
gonna
I
do
know
your risk
last
management.
time we spoke, you attributed a lot
What
of
was
the
your stop
success
loss?
to customer awareness because of the distribution of this Pepsi deal.
How big of a range
right?
are you giving
Getting
yourself?
it out there. Is that part of this recipe?
That is a made part of the recipe, but there's a lot more to it. I think you look at the quarter, we did $326 million in the second quarter of this year, and what's interesting, we did $311 million in all of 2021. So the teams have been working really hard. A lot of it had to do with the expansion we had, the plans with the Pepsi partnership that's getting close to its 1-year anniversary coming up.
Yeah.
And expanding in a lot of different retailers and bringing new consumers in.
So this happened a year ago. It was an August deal. I saw that the Celsius cans went on the trucks in October, and you've been getting them out. When you think about customer awareness, and now you're number 2 on Amazon for energy drinks, right? Number 3 in convenience stores. How are you growing? What do you think about what's happening?
Well, I think you're seeing a monumental shift within energy altogether, and actually all of beverage. The energy category is one of the fastest growing in food and beverage. Celsius is the number 3 energy drink brand right now in the category, really a firm number 3. Lots of opportunity ahead. We are one of the one of the fastest growing brands in the category, both in dollars and units. So we're bringing, we're driving dollars and we're driving units. You're seeing a lot of those beverage companies out there growing dollars but not growing units. So we're really expanding the category, which is key, showing we're bringing new consumers in. And then a lot of our consumers, when you look at the consumer mix, is unique. It's 50-50 male-female and 18 to 44 because of that fitness lifestyle and our DNA being in the gyms and health clubs, and now expanding across, really across the country and reaching more consumers.
I think it's just because it's blowing up. I think it's fair to say that people who never heard. I don't even know how else to quantify this, because people who never heard of Celsius now heard of Celsius. I mean, this was $17 in 2020, and now it's $172. What's in this recipe? You called it a lifestyle megatrend, and I think about fitness and health. But then there's other things. I mean, are we concerned about the caffeine or any, sugar substitutes or things like that?
Yeah.
Tell me of the big picture.
Yeah, I think the big picture when you look at it, so if you look at a lot of our flavors right now, our core portfolio, really fruit forward. We just launched a lemon lime. We got a green apple cherry, which is really good, nationwide at 7-Eleven. And then we started to launch this vibe line, which is as well as really allowing us to be more fun and inviting. And really, if you look at a lot of the can profiles within our vibe portfolio, it takes you on an experience, fun flavors, really bringing, it's exciting a lot of consumers. You almost get a journey in every sip. We just launched a Cosmic Vibe. That's Circle K we're really excited about. Tastes great. It's a sparkling fruit punch. But that lifestyle that we talked about, when you talk about fitness lifestyle, it's mainstream today. I mean, look at all the number of gyms, look at all the health and wellness post-COVID, and the brand's resonating with a broad consumer. It's not just energy, it's energy plus, it's that essential energy for life, and we're leveraging the distribution with some great new partnerships and new vehicles to get the word out about Celsius.
Yeah, and I think people love it. There's different levels of caffeine, right? What if someone doesn't want caffeine or they want a lot of caffeine? Are there some with no caffeine?
No, we don't have any caffeine. Our average product has about 200 milligrams of caffeine.
I mean, it's an energy drink.
It's an energy drink.
Okay.
It's got 7 essential vitamins, green tea, ginger, guarana. We're less caffeine than a lot of the coffee houses that are right around the corner here when you get a 12-ounce coffee. So we feel it's the right amount, and no sugar, most importantly.
Right, no aspartame and things that are too fake in there, right? No sugar, no aspartame. Tell me more about getting everything done, because your costs have been on the rise. You did raise prices. Some of your competitors also may be raising prices because your costs have been higher too, right?
Right. So we did take price last year to offset some of the costs, but what we're seeing now because of the
I don't know if I've had a Celsius
expansion, the
before.
revenue numbers, the volume, we're starting to see some leverage come out of the system. So when you look at our gross profits for the quarter, you saw those gross profits to get a little bit higher than the mid 40s, and that's really due to a lot of efficiencies with our supply chain, routes to market, and really shipping more product, which we call in our orbit. So our orbits we used to have 6 orbits last year. Now we're up to 9. And what an orbit is, it's where you produce the product, ship the product, and sell the product. So it allows for more efficiencies. You're shipping heavy liquid around the country, which is very expensive.
Yeah.
So you
Just
want to
throwing
drive
shade.
efficiencies.
Yeah, I don't know.
and
Maybe
that's
it's
what
not
we're seeing
that green
really
apple
with our
cherry.
gross profits, leverage coming
Can't even
through.
imagine.
Also, you saw some leverage in the
Party
GME
my
line as well.
taste
as
buds
in
be
sales
doing with those
marketing.
flavors going on
and I
up
see
there.
you have pre and
Wild.
post-workout. I mean, this is for fitness folks and just people who love, a drink leisurely. You have a lot of influencers. You have some great deals. I know NASCAR and F1, the Ferrari team there, and you had a new one.
We did. Yesterday we announced MLS partnership nationwide. Soccer is a growing segment. A lot more consumers are coming in. And might I say that we started off in Inter Miami with South Florida. We'd signed them as our official energy drink of Inter Miami back in February. And then they announced Messi. That wasn't even part of the strategy. So that was a big win for us. And then just yesterday we announced a nationwide partnership. And what's really excited is Celsius is going to be the official sponsor for the extra time. So it's once you reach those 90 minutes, you need that extra.
And there's always
you need some
there's
Celsius for there.
extra
So
time.
that essential energy is going to get you through.
Oh, that's pretty cool. You're gonna have. I mean, have you had shots of Messi holding Celsius yet?
Yeah, we're working on it. Trying to work on it.
I mean, and that's part of it too. Is having influencers or great people having and using Celsius, right? You also have a lot of influencers. I saw some of the other names on there, YouTubers, rappers. I mean, what's the strategy there?
Yeah, so I mean, we're a fitness lifestyle brand. So I think if you go back, I've been with the company 12 years, really focused on the gym. Now with the broader distribution and the way consumers, the segment has gone, everyone wants better for you, but they don't want to sacrifice flavor. Everyone wants more function in the foods and beverages they consume. Celsius delivers on that. And fitness is hip, cool, sexy, premium. That is the way of today. I mean, if you look at it, we're perfectly aligned we're going after broader consumers. You talk about some of the influencers. We just partnered with Jake Paul. Last week he had an Nate Diaz fight, but he's still fitness focused. So even though we're influencers we're going after, they still are tied to fitness. And he's been drinking the Celsius for over 10 years as well. It's really authentic partnerships. We have Shaun White. We have a lot of a variety of snowboarders. We have a lot of Nick Walker is a fitness bodybuilder. We have a lot of great influencers that are all part of the journey here.
So, just continuing to grow and building this awareness, is there someone you're working on now that you may want to tell us about? Is it a sports person, a music person, I don't know, model?
Yeah, well, we can't disclose anything, but I got a whole team that's working on to build the plans for 24. We're going after a variety of different vehicles.
Okay, so
F1's a great partnership. So we got Ferrari partnership. We're going to do great things here coming up in Austin, and then the big event, which is going to be in Las Vegas. So the F1 race out there is going to be massive. Really excited about that.
That will be really cool.
We got some great influencers will be coming on board and through the back half of this year and then into 24.
Tell me about this partnership with Pepsi. This was about a year ago, last August. They also bought in, got some convertible shares, preferred shares as well. So they have money invested in the company as well as the partnership and distribution. How long does that last? What would you like to see from that partnership? I know you worked with 7-Eleven recently, but some of these key partners are key
New low there on SPY.
Sustainability and growth. Tell me about the Pepsi partnership.
Yeah, as you're getting closer to the end of the day.
No, absolutely. So they have an 8.5%
if the move just gets slower and slower,
of the preferred shares.
Contracts are king.
It's critical to the success.
Given the ones I had were in the money, so that helps.
And when you're going after the energy category, you're going after going
they
alongside
really
some of the largest
going
CPG
up a whole
brands
lot.
in the world. And when you look at distribution, shelf space, maintaining your shelf space, getting a cold availability and access to cold equipment is extremely critical to the success. And that's where we really need to continue to work on for 24. Expand the cooler placements, expand our locations, get those secondary placements, and continue to build your breadth within these cold walls.
Well, there's a little flush on SPY.
This is it's initially
That
a
would
10-year
move the
deal,
contract.
but we can, it's auto renew capabilities on there as well.
There's some
so I think
limit.
It could be for
Some
life
stop
here.
losses triggered there for sure.
I mean, if you had to renew it today, you would renew it?
Absolutely, it's going great.
Oh,
I think,
dude,
there's
all
a
the
ton of
stops are
unlocked,
getting hit.
Opportunities. Food service, the amount of food service Pepsi accounts has right now.
That was crazy.
11% of our revenue going through Pepsi is food service, which we're told is extremely unusual for a beverage, an energy brand. And we just stopped and brought some product to the studio here, and we stopped at a deli that has Celsius cooler, and they said about 3 out of 5 people that come through the counter are buying a sandwich or something with a Celsius. So it shows you Celsius is more than an energy drink. We're expanding the usage occasion within energy. And I think that's a huge opportunity that's really unlocked and untapped at this point.
What's your favorite?
Yeah, those contracts I saw are up like 80 more percent.
I got a strawberry lemonade for summer, so cheers to that. It's really refreshing.
But you have them all. I mean, when you think about it, and any final
There was so much time still in the day. It's still an hour and 15.
Business, it must be. I mean, you're growing, and how many employees you have. Your global footprint. Tell me a little bit about running. I mean, because all CEOs have labor issues, supply chain issues, all kinds of things. But tell me about the growth plan here and maybe how you get past some of those headwinds.
Yeah, I mean, we got issues every day. That's why we're here, to help solve problems. That's what it's all about. But, we added about 50 people last quarter, over 55 people last quarter. We added a lot of part-timers in regards to, we graduated 170 college university students before they go back to campus. So we're in over 100 college.
IMC is starting to break out there. It's up 7.6 now.
We have another 100 that's planned in the back half. Operating a public consumer products business profitably and growing with the growth rate we have, it's challenging. We're building our teams out. The excitement, I think, around the company, and that's what I really strive for. We're doing something that hasn't been done in the last 10 years. If you look at, we're on a trajectory right now to be almost a 10% share in the energy category, and that hasn't been done in the last 10 years. So it's pretty exciting times at Celsius. We got a highly energetic company and team members, so we're ready for the challenge.
And glad to have you on. And number 2 on Amazon, as we were saying. I mean, that's an important place to be as well. I mean, I think everybody's ordering from Amazon, particularly since the pandemic.
I mean, it's an omni-channel world. Consumers want it when they want it, how they want it, and extremely important. If you look at Instacart and a lot of the delivery apps, and that's the only way to build a CPG brand these days. You need to make sure you're right there with your consumers and in connecting with them where they live, work, and play as well.
All right, John Fieldly with the very latest from Celsius Holdings on another record quarter and continued growth. And, of course, the Major League Soccer deal. So another big brand to work with you closely. Nice to see you, and thank you for being here in person. CEO of Celsius Holdings, John Fieldly. Always holding his Celsius. I always get a kick out of it, but I don't get tired of it. Can't wait till next time. Let's see what flavor he has next time. Still ahead, we'll bring in our panel to discuss big retail and the takeaways from earnings from Walmart and Target. Next.
Might catch a nice bounce trade at some point today. Move back to VWAP. Maybe not that aggressive, but maybe that 438. I shouldn't have sold so soon. Oh well, scaled out. And then dumped it. AMC 6.8 there.
At Telsey Advisory Group, and Scott Mushkin, founder and CEO at R5 Capital. Thank you both for being with me. So, Joseph, I'll start with you. I think a lot of folks were expecting some good news out of TJX and maybe less good news out of Target, which is exactly what we got. What stood out to you with Target? And I know that you've been lowering your price target on this one, right? Tell me a little bit about the moves you're making.
Yeah, well, clearly the sales were pretty soft, and they were expected to be soft. I think that the investment community was assuming that they were going to take down numbers for the full year after a soft quarter, and that's exactly what they did, which is why I think you saw a little bit of relief in the stock yesterday. I think there's still a big margin recovery story here to be had over the next couple of years, but clearly their forecast for sales could prove conservative for the second half, but it's soft. I mean, and it's soft in comparison to Walmart, TJX, and some of the others.
Right, understood. And Scott, what do you think?
Well, I mean, the elephant in the room, obviously, is the controversy that the company saw over its Pride Month displays and merchandising. So, I mean, I think they are recovering from that. They talked about a much better back to school period. I think if you step back, I mean, we saw what happened to Bud Light. I don't think we're there with Target, but I do think the company needs to figure out a better tone with some of these social issues. Beyond that, obviously saw the sales out of Walmart and TJX, much stronger than we're seeing with Target. I think the thing that's happening to Target a little bit is that, it's kind of like imitation. Target had a great run, brand partnerships. Clearly from Walmart, you're seeing them do a lot of the same things. They have a great partnership with Reebok, Wrangler. They got the mannequins going in the store. So I think it's putting some pressure on Target to up their game. And Brian Cornell, I've known him for years and years. He's an incredibly capable executive and his team. So I would anticipate they're going to step up their game once they settle the company down a little bit.
Yeah, understood. I mean, Joseph, do you think there is potential going forward? I mean, what needs to change? Because, that's what Scott's saying too.
Well, what needs to change the Target, you're saying? The consumer needs to be a little healthier. I think their core consumer. We've seen that customer trading down a little bit, really focused on value and food and consumables and private brands across the board. We did hear some good news out of Walmart today that they're starting to see a little bit of life maybe in discretionary goods, which certainly would benefit Target, especially as you get towards the holiday season. Target obviously has a lot more discretionary to offer than Walmart does. And so, we're hopeful to see that happen. I think that trend, that Target is a very loyal customer and they've got a very strong customer. We just need to see them visiting a little bit more frequently, and that would help cure a lot of their issues.
Yeah, and obviously grocery is a big pull too. Scott, tell me about some of the names and trends that you're watching, names that you may think are, well positioned.
I mean, I think the first one is Walmart. They're winning tremendous amount of grocery share. What they've done in advertising, what they've done with omni-channel, they're automating their distribution facilities. It's going to give them an enormous productivity advantage. So, Walmart's the one to watch over the next couple of years. They really look like they're going to enter a positive feedback loop. I mean, we put out a note, is Walmart a growth company? Which it seems like, wow, could Walmart be a growth company? Honestly, it looks like it's headed that direction. So, in the short term, we're a little bit more conservative around what we think about the consumer. But right now, if you're working, you're spending. I think that's the message from earnings season right now is that, hey, the consumer, they're employed and they're spending. Maybe they're rotating a little bit more to services from goods because of the pandemic. But I think the message coming out of earnings season, we can talk about like a Home Depot or something, but the message coming out of earnings season right now from the companies is that the consumers are spending.
Yeah, and it's amazing because they're racking up credit card debt and they're just doing that. Joseph, I'll give you the final say here. Just any themes or other names that you think could be real winners here?
Well, I'm with Scott on Walmart. I think that they're going to really be one of the winners to watch. And, they keep getting better. They're building an ecosystem. They're doing battle with Amazon on a daily basis and getting better at it and more efficient. And there's just so much upside potential for them, as Scott described. I think that they're really, in the near term and the longer term, one of our favorites. One more to throw out there would be Costco. I still like Costco. Caters to more affluent consumer seeking value, and that's something you can get these days at Costco.
Yeah, it's great to see you both, and thank you. And of course, Walmart, which is trading to the downside, but had some great numbers. And as you both said, that was something that you both liked today. And we need the consumer to be able to stay strong too. Thank you both, Joseph Feldman of Telsey Advisory Group and Scott Mushkin of R5 Capital. Great to see you both. Thank you for being with me. That's going to do it for us here on the watch list. I'm Nicole Petalides. I see you every day, 11 a.m. and 2 p.m.
Holy flush.
live from the New York Stock Exchange. So I will see you tomorrow. Thank you for watching. Oliver Rennick, Market on Close. Next.
Could have been 1,000%ers there. Oh, maybe not 1,000. Let me see. Valhalla. Well, they're up over 100% from when I sold them. That's all right. That's all right. Mega cap selling off. Something's really pushing. Hour indeed.
Good afternoon and welcome to Market on Close. We got an hour left in the trading day. I'm Oliver Rennick. Thanks for tuning in. We've also got some earnings this afternoon. We've got Applied Materials giving us a little preview into chipmaker demand ahead of NVIDIA next week. And some great guests, Colin Roche and Dick Beauvais joining us at the top of the show. We're going to be talking a lot about bonds, of course, as the attention certainly has shifted to the Treasury market in a way that is causing problems for stock investors. More of the same today. A faded bounce early in futures, just like the buy the dip attempts that have been faded over the past week. Equities just can't hold a bid. S&P back below 4,400, still holding levels that keep the longer term uptrend intact, but short term, certainly a trend developing off the highs that we have to describe as quite negative. We'll talk charts and how to frame the S&P 500's move with Bob Iacchino later on in the show, as well as taking a look and a reminder at Bitcoin, down at 4.5% today too. Trying to get all the information we can by looking at all the assets that we have to figure out which way this market is going to go going into the last quarter of this year and next year, in which there is still a pretty big gap between investor expectations and the Fed. That's via the cuts that investors are still expecting. But with the move in the dollar, combined with the move in rates, the message seems to be quite clear that we should still be focusing more on tightening policy and potential for surprise hikes or aggression from the Fed, as opposed to a big reversal towards cuts anytime soon. As you can see, volatility continues to remain pretty well bid. The VIX is now shifting gears a little bit higher, and the low for the VIX corresponding directly with two events. So there's kind of two major parts of the VIX chart here, well, possibly three. One step at a time. This is the year-to-date chart. Okay, the high for the VIX so far on the year is still very low compared to where we were during the bear market and during the COVID period. So VIX high for the year is at 30 when we did get a little bit of a short pullback, but it didn't last long. Markets paused around 4,000, the S&P geared up and then took off. More recently, we've carved out a low range for the VIX as the market really started pricing in the pause, the skip, and the slowness from the Fed. The idea of peak inflation and peak Fed cycle is really what pushed us into that last leg of frothy, bullish, melt-up style activity that pushed the VIX down. Now we're coming out of that regime. So at this point, basically, we can describe the volatility or the weakness in the stock market as kind of lopping off that last bit of euphoria that crept in the, call it, 5 to 6 month period this year, basically May to June. The first quarter was pretty much up. And then as we got to about the halfway point this year, things started to get a little bit dicey after a few of those explosive moves after NVIDIA earnings last quarter and such. So now the volatility landscape is kind of shifting higher out of this low vol, very low teens environment. And that's happening as yields are rising. That green bar you see there in the bottom right that sets in motion the swing higher in VIX the last 3 weeks, that's perfectly aligned with the bond market. The 10-year yield bouncing and pushing up to 4% and beyond. That last momentum of bond selling that we're in right now basically began at the end of last month. That was the peak of the S&P 500, July 27th. The point is that all the pieces fit together pretty easily here. It makes a lot of sense, basically. Since the bond market started selling off, stock market started selling off, VIX started rising, and we've taken back a bunch of the valuation euphoria that happened in the latter half of kind of this first half of the year. So it's really now been a couple months that we're dealing with this. But seeing the pause and the upside turn to real downside here is where things get interesting, because you're starting to see some fractures emerge now. Bitcoin breaking a little bit, the 30-year breaking out. Now we're talking real trend. It's not just a plateauing, it's not just a pause or consolidation. We're talking like major technical events here now. The 30-year has broken free. Now we'll talk about the different parts of the bond market and how to think about bonds as a trader, as an investor, with Colin here in a moment. But the general idea is that the long end leading the way should tell us something encouraging about growth potential, and we see that as all the GDP expectations are getting ratcheted up. But as Kevin and I have talked about for now 3 weeks running, what's good for the economy is not necessarily good for stocks after you've had this big valuation run up. So the 30-year now is broken free. And so we can generally assume that if the pattern continues, the 10-year is going to do the same. And we're at 4.3% today. So we're just a smidge below last year's high. The 30-year just got through, the 10-year is basically on the way. So we're pretty much there. 4.29 right now. The dollar is also very crucial to watch. I'm going to address that at the end of the show. As we cut the cord and look at my risk radar, dollar needs to be now factored into this move towards a message of tightening that the market is giving us. Risk assets coming off, dollar going up, that's tightening. Now the message will need to be confirmed from the Fed sometime soon that they're going to have to stay on their toes, but that maybe is an issue for next week around Jackson Hole. Right now, let's keep talking about some of the earnings and the short-term technical moves that deserve our attention. Tonight, we'll be focusing on the semiconductor group, which is holding its own right now. Cisco had good earnings. If Applied Materials can deliver a big beat, that could be a little decent dose of optimism for tech bulls. But right now, it's going to take more than just kind of second-order names. This market needs something big to turn around the momentum here that is quickly building to the downside for risk assets, upside for yields, and a relationship that looks a lot like last year's bear market. Got Renita Young and Kevin Hanks to start things off here with us. Kev, more faded rallies. I mean, this is getting pretty ugly, man, like every day now.
Well, here's the thing, Oliver. If you put a paper to pen or pen to paper right now, 5% down on the S&P, guess what it is? 43.76. So we are teetering right at that 5% lower level on the S&P. Now, the NASDAQ is through it. The NASDAQ, the 5% off the highs of the NASDAQ is 15,135. So we're well through 5% lower on the NASDAQ. But watch and see if anything happens around a 5% sell-off from the highs in the S&P. That might bring in some two-way paper, but if not, then these markets are going to keep working. I think the next big event, Oliver, like I said earlier today, is NVIDIA next Wednesday, and then you've got Jackson Hole Thursday, Friday. So later next week is when things will start getting a little more exciting. But right now, this is just a market that feels heavy, Oliver. It just, any bid can't last. It just evaporates. So right now, we're not crashing. There's no significant, hard-nosed sell-off here, but we have no energy on the upside right now. We've lost our momentum. So now you start looking at technical levels, and 43.76 is 5% off the highs, Oliver.
Yeah, looking at kind of 43.50 for the S&P 500 as well. That kind of gap move up from earlier in the summer. So to your point, maybe some hope that some of these technical levels as we approach might bring in a little, as you put it, two-way paper. But the 50-day moving average didn't do it either. We kind of just cracked right through that. So to your point, heavy, but not a nosedive. I like the way you described that. There is some stock-specific, fault that we can put on a few sectors here. Renita, tell us what's going on in healthcare, because I feel like this is a little bit of a sector-specific story. But when you're looking through the market today, it's definitely a problem because the group is really dragging.
Well, you can see that CVS Caremark, let's start there. This share, these shares are falling today. They're down around 9%. And that's because Blue Cross or Blue Shield of California said that it's replacing this company as its pharmacy services provider, which also adds pharmacy benefit management. And so this is a really big blow to the company, but just a few minutes ago, CVS actually issued a couple of responses to this, saying that they understand that Blue Shield of California announced that it's instead using a number of pharmacy service providers beginning next year. CVS Caremark is going to continue to provide specialty pharmacy services for the company. And CVS also backed its free cash flow for the full 2020. Now, the big news is that this major...
Okay, got to jump in because we had a little connection problem with the mic there, but to your point, losing the California support for the insurance side, the earnings didn't do anything to help this either, the numbers that they gave out. There's also a consumer kind of weakness that's showing up here too, and both the home builders and then some of the earnings connected to the consumer group, which we thought were going to be strong with Walmart today, Kev. So, I mean, the fact that nothing here is really providing any pushback, both for earnings or just, news flow-wise, is tough because you got a good day for Cisco. It could have helped tech, but it's down anyway. You had a good report from Walmart, and that's not helping Walmart slip. So no one here came to save the day, basically.
Dude, SPY just keeps flushing, man.
Yeah, Walmart's a perfect example, Oliver.
Have patience.
Sometimes it's just
These
valuation,
trades.
right?
Holy smokes, yeah. Up 300% from when I sold them.
That normally would have kept this stock firm or rallying, but
400%.
And you saw the pre-open,
That's since I sold those last ones.
But Oliver, the valuations have gotten so rich in this name. They've run so far. This stock doesn't normally trade straight lines like you've been seeing out of Walmart. The valuations are stretched.
It's tough to be patient on those options, especially dailies. It's like
yesterday, we kind of told you about this.
Once it starts to
flip,
flip,
they have to really beat.
Happens so
to
fast.
Keep the stock up where it was, and even though the numbers were good, the street's saying not good enough, down about 2.5% in Walmart. Doesn't mean their numbers are still good, but stocks get overbought. Oliver, we're seeing it in the Magnificent Seven and the high cap tech. You're seeing it when these earnings come out. This market in general has had a really strong run where valuations, just general valuations, are stretched. So it may not be a stock-specific story. It just may be everything gets to be taken down a couple percent. That's why I'm watching 5% on the S&P. See if it brings in any dip buyers here.
All right, I like that point here. It's just pretty broad.
I would have doubled my account today.
Right now. Thanks, Kevin. Thanks, Renita.
Not
on
quite.
the subject of valuations coming in, we could probably blame the breakout in Treasury yields as offering a compelling alternative again. Colin Roche joins us on the subject of bonds and how they connect with stocks. He's a CIO at Disciplined Funds. And there's
These are the days I'm waiting for.
Recently about bond escape velocity. Welcome back, Colin. When I look at the 30-year,
it was crazy. It was all happening. It was still so early. I kept saying that. It's like, oh, it's 245, or it's 215. It's not even 2. It's like, how much move has already happened?
No, yeah, and thanks for having me. There's a hurricane about to hit San Diego, which is about as anomalous as it gets.
Okay, so literal other escape velocity.
I hope this isn't foreshadowing of what's coming with either bonds or stocks here, but the concept of escape velocity, in the sense that I'm referring to it, is really based on the concept of duration in bonds. And just to not get too wonky, but duration basically refers to the interest rate sensitivity of a bond. So, for instance, a duration of 5 means that for every 1% increase or decrease, that's the volatility that the bond will have. So it'll move by that amount, basically. The principal will. And in terms of escape velocity, what I'm referring to is that as interest rates rise, this is one of the interesting things from the sort of studying like the 1970s and high interest rate environments, is that when interest rates move higher, especially on the short end, the bonds actually reach a certain level of escape velocity where, especially on the short end, the yield is so high that it offsets this duration and principal risk, where the actual increases in interest rates are offset by the yield. And so this is especially important in this environment where things like, especially T-bills or even 2 to 5 year bonds at this point, 2 to 5 year Treasury notes at this point, are actually yielding enough where their interest rate sensitivity is likely to be low enough where it's going to be offset by the starting yield. And so these instruments on the short end start to look especially attractive in this environment.
So clip-in coupons, basically, to phrase it that way, will be able to offset what principal is eroded if the price goes down for the bond you're holding?
Yeah. Yeah, and part of this is
flashing new lows in SPY.
It's an implicit
It's getting kind of aggressive
Fed
now.
forecast, basically, because what we're assuming here is that looking back at the last few years, for instance, you had an unprecedented surge in interest rates from just the rapid move. The Fed moved so fast inside of a one-year period that bonds that had high duration, they got whacked in a really unusual way. Whereas going forward, we've kind of reached this level where the Fed looks like maybe they're thinking about kind of raising interest rates a little bit more.
Dude, this last 5-minute candle.
Upside on interest rate risk at this point looks like, especially relative to the last few years, they're not going to raise interest rates another 5%.
15 on the RSI on 5-minute.
Really strange happens. So you're increasingly at this point where the bonds, especially intermediate bonds, look increasingly attractive because the potential for the Fed to raise rates and cause these principal adjustments downward is less and less likely. So you're showing this chart where the environment where low yields with rising inflation is really, it's the kind of the very worst potential scenario for bonds in terms of risk-adjusted returns. Whereas the environment today, we're not quite at a point where bonds look super sexy, but we're at a point where bonds do look increasingly attractive because inflation is falling.
I'm gonna get some calls for tomorrow.
The probability of Fed hikes is at least waning, reducing to some degree, and the starting yield is very, very attractive.
Got a 437 for tomorrow.
Okay, so this might be sort of taking it to the absurd level, but to kind of stretch it to the extreme scenario, is there any scenario in which the rates move up so fast that you can't get your coupon from the bond in time, or is it just like, look, you can't
coupon is only down
everything
3%
on price, so mathematically does the escape velocity just hold up past a certain level, or is it contingent on how fast those rates move, where you might go, okay, historically they probably won't move that much faster, but you see what I'm saying? Like, is there an actual possibility that it doesn't work, or is it just mathematically it works?
Yeah, if you buy a 10-year U.S. government bond at 4.3% today, I mean, you're going to clip 4.3%, for 10 years. You don't have to worry about, earning the interest and getting your principal back. Your real return, though, and if the Fed is raising rates a lot, let's say they go from 5.5 to 10 in the next year, that bond is going to experience a huge amount of volatility in the short term. So that duration risk, that interest rate risk, really, it creates a huge amount of volatility up front. You're going to
45 minutes left.
It's all going to even out in the long run. You're still going to get your 4.3 in the long run, but
some
it creates a
least
huge
leveling
amount of
out, if not a
volatility.
bit of a bounce into close.
That's the risk. The scenario you're talking about, I have a hard time seeing it, but
this is the beginning of capitulation. Then we're gonna have a big gap down tomorrow.
Like a 1970s or 1940s
we'll be fine,
style,
but
repeat bump of inflation where you get this sort of second bump in inflation.
If not, we should see a gap up like we did this morning.
In a big way, and I guess that could happen if you got another supply shock, or the
how
big
oversold
risk
this
really
is.
Probably is this is what happened in the 40s and the 70s, where you got a huge oil shock. So oil prices went up 100% in 1946 and in the late 1970s, and that was the big contributing factor to the double bump in inflation. Is that going to happen again? I guess it could. There's a lot of things that could cause the price of oil to double here. Does it look like the likely scenario, given that the weakness in places like China and even demand even in the United States, it's much stronger than it's been expected, but it's still waning to some degree. So that looks like a way outlier event. But certainly, if you're going out over, the basic gist of my analysis here is that the 5-year, the intermediate bonds really are the ones that they've reached a point of basically neutral velocity there. They haven't quite reached escape velocity, but anything under 5 years has sort of reached escape velocity. Anything over 5, you're still taking principal risk. So you've got to be wary of, especially if you're getting out over the 10-year, especially the 30-year. The 30-year is still exposed to a lot of interest
those calls went like 300, 400% from when I those puts from when I sold them.
Win-win as you can get, which probably doesn't bode well for stocks.
Wow.
As like the alternative trade, right?
Yeah,
so it
that's
sounds
a
like
great
it's kind of an
environment for
implicit.
short-term investors, people focused on
Yeah.
T-bills and CDs and things like that. The savers are in hog heaven these days versus anyone who's taking duration risk, whether it's in longer duration.
Yeah, if I can get like
style
20% on these
equities
calls, I'll
or
probably sell them
longer
today.
duration bonds, that road is going to continue.
There's a
to
pretty
be
big
bumpy.
sell-off. We might not have a gap up.
All right. Sounds like a good explanation for why there's a limit here to how high valuations can run, and the juiciness of the meaty part of the curve there for bonds to get escape velocity like it. Cullen, thanks. Always appreciate the perspective. Very interesting way to frame the bond move. Pretty compelling case to own bonds. On regionals and the sensitivity of that group around rising interest rates. Dick is a financial strategist at Odeon Capital Group. Joining us here this afternoon. Dick, good to have you back. Appreciate you being here with us. What do you think about your coverage of financials after a conversation like that when we're talking about how quickly bonds are moving again? Should this blowout move in rates worry the banks or make them happy, or does it just depend what kind of bank we're talking about?
No, I think your prior guest was superb. I think his remarks were right on the mark, and I think people should listen to what he said and really consider it. Because if you take a look at the banking industry, the banking industry in the United States has $23 trillion, and it's not mainly in the regionals, it's mainly in the biggest banks, all right? You put interest rates up the way you have over the last 12 to 18 months, and you're destroying the value of those assets. And you not only destroy the value of those assets, but you're wiping out the equity in those banking companies. And that's exactly what is happening at the present time. Therefore, anyone who thinks that the banking crisis is remotely close to being over is not thinking about what the impact of rising interest rates have on bank assets. So the net of it is that if interest rates stay just where they are, the banks are overstating the assets that they put in their balance sheet. If they're overstating their assets, those assets can be marked down ultimately, and that wipes out their equity. Simple example, Bank of America. Bank of America claims it has XYZ amount of what they call held-to-maturity securities. It's overstating the value of those assets by $107 billion, okay? Bank of America also has a mortgage portfolio, which is about 270 billion in size. The yield on that mortgage portfolio is 2.95%. They put, and again, think of what your prior guest said. They show that as being worth par. It's not worth par. It's not worth what they claim it's worth. The held-to-maturity securities are not worth what they claim it is. So the banking industry is telling investors, this is what the value of your assets are in this company, and it's just not true. And that's why there should be a major capital raise in the banking industry to redress the problem that these banks are simply not telling you the truth.
He does got the guy from Jurassic Park,
How
you're
might
right.
they do that capital raise right now, Dick? Would we actually see
I thought he looked like a character in Star
issue
Wars.
shares, issue debt, or when I hear capital raise, I mean, that's obviously very bearish to stocks generally that do that.
Yeah, it's common equity, right? In other words, you have a comment,
like one of the non-human ones.
You have a proposal out for comment right now, which is being backed by the Federal Reserve, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency. That comment, will be done by January. Then the final rule will be put out, and that's when I believe that each one of these banks will get a note from the Federal Reserve or the group of these three banking regulators to raise X% of common equity by selling common equity to shareholders. And I think once that's done, we'll resolve the problem. But I think that's ahead of you. I think that's going to come, and I think that's the reason why if you're going to buy a bank stock, you better be aware of the fact that you may take some losses for over the next 6-month period.
Are there any that look to you like they wouldn't have to do that? Is there a ranking? Is there a spectrum? Or is it just broad, the entire sector is suffering the same problem and facing the same fate?
Well, there are banks. I mean, if you take a look at a company like Comerica or Regions Financial, they've been marking to market their securities properly. So they don't have a tremendous amount of negative equity relative to what they produce on their balance sheet. But if you take a look at, the huge banks like JP Morgan, Bank of America, Citigroup, Wells Fargo, they have not marked to market the value of their holdings. And therefore, you would have to assume that those are the companies which would have to come up with the greatest amount of equity. And by the way, the banks themselves have brought on this problem. I know that every investor out there thinks that buying back stock makes sense because it pushes the value of, the securities up. But in banking, it does not. All right. For the last 5 years, we'll say the top 105 banks in the United States have bought, roughly $400 billion worth of stock. They've done that over a 5-year period. The price of those stocks today, other than JP Morgan and one or two others, is down. They bought $400 billion worth of stock, gave $400 billion of capital away to investors who didn't want to have anything to do with their companies. The result of having done that is their stock price is down. And in this 5-year period, those stock prices went down in 4 of the 5 years. So these guys kept giving away, shoveling cash out the door, giving that money away at the same time as by doing so, they were weakening the bank. And they were causing the price of the stock to go down. Now, why were they weakening
stupid? I
the
trade
bank?
all day and then
If they kept the $400 billion
these overnight ones and give up all my gains in the morning,
given away, they would have earned 1% more in earnings than they produced. However, if they kept the $400 billion in the banks, that would have funded $4 trillion in additional assets. If the return on those additional assets were anywhere close to what the return has been over the last 5-year period, we're talking about mountains of money that these banks did forego, did not utilize, because they thought that by buying $400 billion worth of stock back, the stock price would go up, which again, it did not go up. It went down.
I think is it possible to axe those buyback programs as some alternative to the share raising that you said is going to be required? Because in some ways they're kind of the opposite of each other. Is any of that math work out? If instead of issuing a bunch of shares, they just say, okay, we'll stop buying back the ones that we're planning to.
We'll pop there on barbecue.
Get a little capital that way.
I'm 5-5 still.
Well, they can do what I think companies like Truist, U.S. Bank is doing. I think even the bigger banks, I think I wouldn't be surprised if Bank of America could do it. They shrink. In other words, if they let the loans run off, if they don't increase what they pay for deposits, and they let the balance sheet shrink, if the balance sheet shrinks fast enough, then their equity to asset ratios will come in balance with each other. And I think that what you're likely to see very clearly, I mean, Fifth Third, I think, is explicitly stated this. What you're likely to see very clearly is that these banks are going to shrink their balance sheets. That means that over the next couple of quarters, bank earnings are going to be stressed because the bank balance sheets will be shrinking. Because believe me, banks do not want to go out and increase the rate that they pay on deposits to bring deposits in to make loans so that the size of their balance sheet increases at a time when it is apparent that, at least from my perspective, the government is going to ask them to raise equity. The only rational approach to that is to shrink the size of the bank. And that's what I think you're going to see, in as I say, Truist, U.S. Bank, or Fifth Third, maybe Comerica, maybe Regions Financial, and a whole bunch of other banks are going to follow that policy.
Okay. All right. Sounds like we still have some major potholes to maneuver through going forward if rates are going to blow out the way they are. Thanks for the heads up, Dick. Much appreciated.
Okay, thank you. Bye-bye now.
Absolutely. Sure thing. Dick Beauvais, Odeon Capital Group. All right. So if you're not bared up after those two convos, then I guess I don't know what to tell you, because it sounds like there's some major issues still Dick sees in the financials of the banks, that is. And to Colin's point, why chase a stock rally at high valuations when bonds have gotten through their escape velocity and will pay you basically no matter what? Options Corner when we come back. Stick around.
The banks are sound and resilient. The banks are sound and resilient. The banks are sound and resilient. Alright, 30 minutes to close. We made it. Green. Dang, Bubba. Might change. Might join Discord's not going to do anything for you. I mean, it will, but it's not going to change what you're doing. It's a free Discord, it's not like a paid group. Alright, I just closed the call there. Wow, look at that flush. I closed with a trailing stop. That's what I need to use for this. Just give it enough room to be able to breathe when it's just melting down and I'm staring at it, being impatient. No, that's good, yeah. Yeah, definitely don't be distracted. Discord is just like a resource for information and bounce ideas off of and see what other people are doing. There's not like triggers for day trading or anything like that. My swing trades and my long-term trades I put on there. Those are the only positions I show or put on Discord, I guess. Let's get nuts! Get nuts indeed. Thanks, Bubblicious. Enjoyed the program. Appreciate it, man. Thanks for the support. Fresh. Have you even subscribed yet? I'm just playing. Thanks, man. Yeah, definitely don't be joining if you make it competitive. That's no good. Appreciate the support, Bubblicious. The generosity. Yeah, actually, I don't even share my exits on Discord or my gains. I just put entries, but it's just for swinging stuff. I don't like people flexing too much on there. Or people getting emotional. I try and shut all that down. Excuse me. Same with YouTube chat. $20 minutes to close. Yeah, I was just reviewing yesterday and the trades. Seeing, because I was green yesterday. It was a pretty small day. I guess it kind of, yesterday was a harder day to trade for sure. For me at least. More range bound. You know. Yeah, this one move is inverse cup handle. After that, it was just basically widening chop, and he had chop before it. Let's get nuts! Try and grab it right in there. Oh, it's just thanks, man. Is having on every TV outside? Or blindsided? I can tell you what the spy's doing. Thanks for the support, Bubblicious. Yeah, GNS is selling off a little bit in the close. Yeah, if you're strictly trading SPY, I guess it is kind of a good. Could use me as a just an audio update on it. Where's my position? Might get in trouble if I actually, if that stop loss triggers on my GNS shares. Trouble. This is boring. Hey, but you know your kids can watch it. More wholesome than the best cartoon out there. This is the way, kitty daddy. GME, a little pop-up of VWAP there. Barbecue still down 7%. 20 minutes to close. Teach them that Yaz for sure. Makes you smarter, that Yaz. They say it's classical, but I don't know. I think it might be Yaz. I wonder if 431 is the final. I'm just trying to figure out where the SPY is going to want to bounce. It's going to try and complete a full inverse cup here. Because this sell-off has definitely accelerated. Breaking out of that trend, I mean, that was kind of a big deal. Like we were saying yesterday. Breaking below this trend we were stuck in for weeks. And you can tell for how accelerated it's become ever since we've been out of there. Today just double topped on close to the support of it. Close enough, I guess. Or triple topped. And then it was bon voyage. That weakness even in the close is crazy. 20 minutes to go. Little green candle there on barbecue. What's GNS doing? Retesting that support. I think I've stopped out at this level. I maybe have actually. Pop's not showing much life either, huh? Down 16. Wonder why RAD rallied today. Must have been from that news, right? CVS.
Now, a separate report out of the Wall Street Journal does indicate the company is also in talks.
I just consolidating down here
over restructuring advisory work as it considers to deal with then the result of these major
barely
financial
stop saving me.
With this move lower, like I said, pacing for one of its worst days since November of 1985, extending its losing streak now to the 8th straight session. Earlier this week, the company's credit rating was downgraded to junk at S&P Global on concerns of lawsuits as well as other factors. Shares have lost about 65% this week. They're now down 71% for this month and 74% for the year. I mean, you could just see their drop has been absolutely brutal. We did also see a B of A analyst maintain with an underperform rating on shares and a price target of $11. That was actually, or $10 lowered from $11 a share. There's only 4 analysts that cover this name, no buy ratings. There's 2 holds, 2 underperforms. I think what is concerning right now is bankruptcy talks, and that's basically what this Wall Street Journal report alluded to, is what sort of happens next. Obviously, they're going to try to mitigate that situation, but it has been a pretty brutal story, and you don't want to be sort of the poster child for being blamed for a lot of this devastation that has occurred in Hawaii.
Yeah, for sure. And it sounds like right now at best the class action lawsuit alleging that they exacerbated it. So reminding me a little bit of PG&E from the California situation. and that stock has not been the same since. So this is the type of thing that can totally change the perception of the business and the brand going forward. So a good heads up for one to watch connected to this, as these stories manage to find their way into publicly traded markets always, one way or another. Thanks, Jenny.
Would have been a nice short.
Trading. And let's talk about the session here going into the closing bell.
I feel like we heard about what's going on in Maui before this day, though. Seems like we could have made. I wasn't even thinking how to trade this.
Trading partners, who's watching Bitcoin, among other things here.
I guess most of this was because the stories blaming them for starting it.
We went from like what maybe could be
so that didn't come out until here.
Sideways move and
I guess you could have shorted still, but
pause to now like closing below moving averages, breaking through. I feel like Bitcoin kind of is in that camp right now.
Yeah, good afternoon, Oliver. This is part of the reason that I never really wanted to buy and hold Bitcoin again. As you know, I was trading it to the long side, and I had a target of around 28,000. I got out of those longs. Could have gotten a little bit more out of it, but that's okay. I mean, we made money, right? But from that perspective, now you see this weakness, and this really smacks to me of the same thing that's happening with gold. Normally, you get a risk asset sell-off, and you get kind of a flight to safety, of which gold and the dollar generally participate.
Is there a catalyst tomorrow for barbecue?
Yields in those situations, because you also have treasuries headed lower. As people are buying treasuries, the yields are headed lower. We don't have that this time. We have yields headed higher, and both gold and Bitcoin are being affected by that. Effectively, gold doesn't have a yield, so if you're trying to protect your capital, you're trying to pull out of risk assets, and you have yields rising, you want to be in treasuries. And Bitcoin is falling prey partly to that, partly to its still ongoing correlation to the tech sector, which is getting hit as well. I mean, I don't think people realize, because it's been so quiet, it hasn't been a panic. So that's why you're not getting moves into gold, and to a certain degree, you're not getting moves into treasuries.
I think my GNS filled or stopped out.
Or a repricing. The mini order,
there's a flush
the S&P
there.
is down 11 of the last 13 sessions. That's pretty quiet. Like when you think about it from that perspective, 3 weeks in a row, if we don't reverse the entire week tomorrow, it's been a while since we've seen that. And Bitcoin's having its worst week since May. So, these are factors that are going straight to the yield story.
Yeah, I stopped out of that GNS.
Idea that inflation might be a little stickier based off the FOMC minutes and some other things that we saw.
Do you think the breakout in yields is necessary? We got it in the 30-year. We're watching the 10s, watching the 2s, but it's been a little bit more muted there, it seems, because we haven't heard any hyper-aggressive language from Fed speakers. Do you think that's maybe what could light a match on top of the kind of gasoline that's already flown in bear's direction?
Well, I hope the Fed stays. Okay, so what do I hope and what do I think? I hope the Fed kind of stays on point at this point, on message.
AMC still climbing.
Now is you got
new
a
high of the day, up
8%. Sort of tone from Fed speakers just after the meeting. And now we see the minutes, and the minutes were, at least it seemed, to be much more hawkish than people anticipated from the commentary we got. Now, juxtapose that against what we're seeing in the yield curve. I mean, we now have the 2s, 10s inversion approaching a 5 handle, a 50 handle. We haven't had
stupid
that
GNS flush.
The lowest close we had in the past was negative 63 in the recent past. And that means that that curve is going back to normalization. Now, when does that happen? Well, it happens actually when the Fed is coming close to easing. Now, that's not what we're seeing right now. But we do see today the 2-year and the 5-year basically
it's
flat.
A fickle one.
And over the last 6 sessions,
this midday just volume pump,
higher,
like,
the 30-year
weird.
Higher. The 5-year is higher like 6 of the last 7. And then the 2 years not. The 2 years kind of up 4, then down 2, then up 1. You look across that particular
10 minutes
set,
of
and
Fugazi.
You're actually up about 35 basis points, and the 30-year up about 26.
I just consolidating down here.
So
wow.
That's part of the reason that you're looking at this more of an economic slowdown to a certain degree, but also maybe prices are going to tick up a little bit, and maybe the Fed isn't going to go more. Maybe they're just going to kind of stay where they're at. They have pushed the rate cut out a month, so a month further away on the CME Fed Watch tool than they had it last week.
That seems like kind of the best way to think about it is we just keep pushing out that rate cut. What's interesting is that pushing out the rate cuts doesn't just serve to support the yields where they are, but it's acting as a catalyst for yields higher. So we've got this interesting kind of momentum situation happening here. So to think about this technically, you and I were on Twitter talking about this earlier, because there's going to be a lot of folks that describe the pullback in stocks as being just that
little rip on
pullback
SPY.
within the context of this 10-month-long rally. But everything in hindsight looks different, right, Bob? Because if we didn't actually close out to a record, and this is the beginning of like a return to the 2022 situation we're describing right now, where yields go up and stocks keep going down, might we look back on this and say this was actually just a long bounce within a downtrend off the post-COVID highs?
So the key to what you just said, as well as the key point made by the person that we were talking to on Twitter, is that you can only see these things in hindsight. You can't name a new bear market until there's a new all-time high, because otherwise you might as well name every single up move bull market, not bear. But otherwise you might as well name every up move a bull market. You might as well have called the end of June a bear market, and then from June till 13 sessions ago another bull market, then from now to today, 13 sessions ago to today, another bear market. Bull markets have to be making higher highs, right? And we've made higher highs off the low, but we make higher highs off of every low. That's why it's a low. So if you're going to actually put some importance into naming these things, which I don't care if we're in a bull market or a bear market, I can make money either way, right? So I don't try to name them, but if you're going to name them, you have to be technically correct. And until you get above a new all-time high, it's not a bull market. It's a correction in a bear market. That doesn't mean it's not going to become one, but that just shows how much these names matter. They don't.
All right, I like that. But, you know, in the business of giving names to things, technically, this could be a bounce within the bear market. So, matter of perspective. Thanks, Bob, for the thoughts. Appreciate it. Path Trading Partners, Mr. Iacchino. Coming up, we'll get our Schwab panel in here. Michelle Gibley, Cooper Howard join me as we talk some bonds and international central bank stories as well this week. Be right back.
Well, Dish is down 2.3. Broke out of that uptrend. See if we can find support at 640. AMC still filling that gap. It's a new high in the day. Up to 5-minute finger slap. Eyes. Now it's doing this little rip. Little rip rally. Not what I was getting those calls for. But I made like 20% on them. I'm happy. Never know at the end of the day. Buys on close, sells on close, market maker doing stuff. Yeah, GNS flushing there. Down 30%. Probably triggered some stops coming through there. That volume picking up. GME just stuck at VWAP all day. Barbecue back to VWAP. Oh. GNS down to that 61.8%. The golden pocket of retracement. See if it holds it. Nice even dollar also. This is the risk with dip buying and not buying on the momentum. I kind of bought on momentum, but it was still shorter term. It wasn't a break of this momentum that's on its way down that brought it to here. Alright, SPY's coming down a little bit. All I did today on the options account was buy some calls here and sell them on SPY. Nothing else. A lot of the stuff's just bleeding now. A lot of my longs bleeding. My shorts, the shorts I have are just way out of the money. I have like bankruptcy shorts on Rivian, Lucid, Joby, First Solar. I guess my Carvana one, that's more of a realistic price. It's up a little bit. But Carvana's not really sold off much. It's only down 2%, so we'll see. That thing gets a dump at any point, like a share offering or something. That would be neat. Long term, remember I opened up those SPY puts a couple days ago, just to hedge on the Theta account as well as the long term. And that's doing well, of course. I don't plan on closing it though. I have until January, and I might hold it all the way until then. It's just a nice hedge on the account. They're 445 strike. So, yeah, those are up 35%. And on small account challenge, we're up today. We're up 292. Could have been up like $2,000, but oh well. Oh well. The market will be open tomorrow. Yeah. Thanks guys for the support. Publishers, thank you for the donos. Much appreciated, man. Very generous of you. Thank you guys. Thanks for new subscriptions and all the likes. Got good job to YouTube, Turtle. We've got barbecue's down 6.8. Actually broke through that 1750 level, so we'll see if it continues down. Looking at like 15 cents on there. 15, then 10. Yeah, kind of ugly. GME broke down through 19. Now it's at 1830. Kind of that first level. So looking at this compared to SPY, we might be in for a bounce next week. GME, you can almost call out SPY's moves on GME. So we'll see. Once it sits here, I think we might get some consolidating or bounce on the market. And then GNS did end up flushing, unfortunately. Now it's at the 61.8 level. See if that holds. EBET came down 24%. Looks like it's probably going to keep coming down. I don't even know why it ripped in the first place. Mullen, big fleshy flush today, down 20%. I don't know how this could be good for the stock. Buyback or any of this stuff. I don't see it. But RAD calls expiring tomorrow. That's too bad. Bad turtle. Yeah, I mean it was looking good. I mean $3 calls to expiring tomorrow was definitely dumb, but it was looking good there for a bit. Not sure what the catalyst was on that. FOMO. FOMO is why you did it. You're gambling, and you want a dopamine hit. You saw an opportunity for one. Thanks for watching, guys. Thanks for the support. Appreciate it. We'll see you on Discord. See you on Twitter. It's out.